Morning, Manish.
Hello, good morning. Can you hear me?
Yeah, I can hear you.
Oh, but I have changed my headset, so I was just testing.
Good morning.
Last time वाला headset actually वो charge ही नहीं हो रहा था last week में.
Morning, everyone. We will go live now.
Give me co-host rights, na?
I will give you that. Just a moment. I'm just facing some challenge with go live. Shida, you can find it in our YouTube channel. If you go there, you will find everything there every week. Manish, we are good to start.
Good morning, everyone. Uh, Good morning, everyone. My name is CA Manish Sangvi. Today, special conclave today, Meet the Experts think tank. A very warm welcome to all participants. Myself, CA Manish Sangvi from Think Tank Multidisciplinary Global Platform. Chapter leader welcomes you all to Think Tank Global Conclave for India Growth Story and Meet the Expert series covering in detail management, think tank valuation, think tank IBC, think tank financial reporting, think tank RERA cooperative, think tank FAFP ISA, think tank IPOs, think tank and capital markets, think tank as a major part of think tank at Vivek.patra. Vivek in Sanskrit means knowledge and wisdom. Patra is an innovative news update containing slides on sharing latest developments and real life examples by CEO, CXO, CFO, specialists, and professionals with a global experience. Today, we have a think tank multidisciplinary global platform, special meeting for all stakeholders in finance, corporate affairs, industry, and profession. Think tank has been in existence since over decades. Idea for this conceived on 6th January 1991 to have a conferences, conclaves with CEO, CXO, CFO panelists and specialists sharing experiences and real life examples. Our panelists are finance leaders working in reputed companies or profession since many years and have a deep domain knowledge. Think tank platforms now digital has got overwhelming response globally on digital mediums and expanding rapidly through LinkedIn and Facebook, etc. Our participants and experts have a rich experience in industry and profession who have done ICAEW, CPA, CFA, CFP, IIM, CA, CS, CMA, ISA, DISA, FRM, IFRS, BTech, Masters, and PhD, sharing their experiences, knowledge, wisdom spreading as a reach out initiative globally through www.thinktanks.co.in. And in spite of limited resources, due to overwhelming response to our annual reports, corporate strategy, and ESG, we have announced 6P awards and recognition, that is profit, people, planet, professionals, promoters, and platform. For our corporate annual reports, analysts, professional achievers, CEO, CXO, CFOs with a very respected jury with a rich experience in interaction with stakeholders and boards. Their recognitions and awards would be announced with a rigorous process of scrutiny and choice and interaction with the participants and would be given digitally and if possible in a well-located auditorium in Mumbai like Yogi Sabhagriha or similar when available subject to the pandemic rules. As participants are aware, recently we have also launched a much awaited reference, kind of a newsletter, appropriately titled as Think Tank at Vivek.patra, a India Growth Story, a comprehensive conference material compilation over 600 pages, sharing experiences by CEO, CXO, CFO specialist with latest development and series on blocking, regulatory frauds, financial reporting, Ind AS, IBC, taxation, digital, capital markets, technical analysis, ISA, bank audit, corporate affairs would be available for subscription and any ethical contributions by well-wishers, etc. We will also be covering important and latest development as suggested by many participants in coming weeks, example, valuations and financial modeling, health is wealth, cybersecurity, blockchain and MSME, etc. We request all to subscribe to Think Tank YouTube channel for watching summits, conclave webinars and join, connect and network on Think Tank webinars group on LinkedIn and Facebook pages. Telegram channel specially created on suggestions of many participants and panelists. I especially thank my colleagues in the digital global team, Anupam, Aditya, Ajay, Anurag, Archana, Aishwari, Hemant, Mitesh, Mihir, Malvika, Nipun, Nischal, Pramod, Praveen, Rakesh, Rucha, Pramod, R. Kannan, Manish, Santosh, Subrat, Snehal, Sandeep, Unmesh, Vijay, Vikash, Yogesh, and others for regularly contributing to Think Tank at vivek.patra. Today, we have an excellent Think Tank multidisciplinary platform, seminar, eminent stalwarts and specialists sharing experiences and latest development. Let's have interactive events. Thank you all for joining today's session. Shall we start today? Good morning to everyone. Today is our first speaker is Mr. Sandeep Raichura, who is working with Prabhudas Liladhar as a CEO for last 2-3 years and have an experience of almost 20 years with a different companies in the capital market. Sandeep bhai, good morning. Welcome to you.
Good morning, Manish bhai.
So warm welcome, sir, and we look forward for today good knowledge about capital market through you, through your medium. And so you start, sir.
Sure. My pleasure and honor, and thank you, everybody. Can the host give me the presentation rights?
1 minute, sir.
Thank you, Manish bhai. Thank you, Manoj bhai, and welcome to all of you on behalf of Prabhudas Liladhar as well. I'll try and do some justice, Manish bhai, to the topic at hand. I'm primarily going to be talking about what's happening globally right now, briefly, and our market view at Prabhudas Liladhar. And we can do a small Q&A if you like after that. That's broadly the idea.
So you are co-host now.
Yes, thank you so much. All right. So my name is Sandeep Raichura. I am the CEO for Retail and Distribution at Prabhudas Liladhar. I've been around at PL for almost about a decade now. We are primarily present across about 200 cities and towns through our franchisee and branch network. Without getting into too much detail, let me start off. Should I proceed with the presentation?
Yes, sir.
Sure. All right. Okay. So I've split the presentation into two parts. So something about the global macros and recent developments initially, then our take as PL and some personal tippani on what I think is likely to happen with markets, and broadly what are the ranges we are talking about, and then, like I said, maybe Q&A. Right. So first off, the evolving macros. So I think even before this decade started, it was very clear that this decade primarily belongs to emerging markets for a wide variety of reasons. If you notice over the last 10 odd years, except for the US and bits and pieces in emerging markets here or there, a couple of years here or there, primarily the entire Eurozone, China, especially from 2016 onwards, has either decelerated or virtually recorded negative to nil growth, right? After a flurry of regulatory changes, some bit of incentives by the erstwhile US administration under Trump led to this expectation that whatever is happening right from 2018-19 onwards is likely to spur a decade of growth. Something very similar to what we saw between 2003 and 2008 in India as well, where all the global economies were aligned, interest rates were low, inflation was low, balance sheets were cleaned out, the central bankers were willing to spend money to spur growth, and broadly we had peace all across. A similar situation is likely to unfold between 2020 and 2030 has been the expectation, and we have seen spurts of that across the globe. In fact, China has started recovering quite substantially over the last 6 months, as the incremental GDP data also shows. They had fallen to about a 4.5% kind of growth rate, which has now started recovering towards almost 6%. As you know, the Biden administration, when it took over, also talked about the crumbling infrastructure. I mean, we look at the airports, the highways, the turnpikes, etc., ports. They've not been able to, in the last 3 years, handle incremental traffic as the US economy grows rapidly. And there's a lot of talk in the US and in Europe about, rebuilding infrastructure, which primarily they've not spent on over the last 25, 30 odd years. Central banks, like I said, have been very accommodative. Increasingly, there's also been this factor of China plus one, which has played in the minds of the world's largest economies, including obviously developing economies like ours, where people are looking at sourcing critical raw materials for their manufacturing activity from another market, which is not in direct correlation with the Chinese. And India, in that sense, is a very, very sweet spot because of the size of supply that it can create, as well as the transparency that comes along with dealing with Indian entities worldwide. So the expectation has been that services industries, metals, especially base metals, IT in general, specialty chemicals in particular, would all tend to be key beneficiaries apart from new innovative industries. And these would in turn spur the cycle of virtuous capital creation in emerging markets generally, which in turn would mean that growth spreads across the globe over the next 10 odd years. Now, this has been the theory, and I think this remains true even now, unless something goes wrong. But over the last couple of years, as we all know, we've had disruptions which has sort of delayed this entire growth cycle. First you had COVID, and now you have Russia, which is a fairly serious crisis depending on how it unfolds. Now, immediately prior to this crisis, where was India? So, although there is a base effect because of COVID, but actually Indian companies, and when I say Indian companies, I'm talking about the Nifty companies, including oil and gas. We have had a substantial amount of growth. So Q1 and Q2 were in fact a 65% odd growth in terms of revenues and profitability and EBITDA margins. Companies like Hindalco, Tisco, Tata Motors, etc., substantially deleveraged their balance sheets during this entire period. And we know about the Reliance story anyway. So this has been a period where balance sheets were cleaned out completely. Banks, sort of after the COVID shock recovered. And all of this has primarily led to a lot of NPA, in fact, resolutions. We saw 8 or 9 very large NPA resolutions happening through the NCLT, which in turn meant that, cash returned back to corporate India on the back of sharp earnings growth. So in terms of numbers, the Nifty grew by almost 45% on a 9-month versus a 9-month kind of comparison till December 2021. And we've had very, very sharp, increase in consumer spending, which has led to auto suffered immediately around Diwali, but leading up to Diwali, there was a lot of pent up demand. So you saw, heavy demand for consumer durables or what are called discretionary, basic staples, etc. So, demand in the urban centers was very sharply up during this 9-month period. In fact, so much so that despite very, very positive and buoyant estimates, Nifty companies, almost 56% of Nifty companies still beat these buoyant estimates. So that shows the element of surprise, the upside to risk as it's called. During the Q3 results, a lot of companies came out with a lot of comments. So primarily the comments revolved around things like, real estate development picking up steam, housing loan pickup, which points to, a broad-based kind of recovery. Credit card transactions trending higher. In fact, credit card transactions in December were at the peak historically in India in terms of transactions and almost there in terms of value as well. Sectors in auto, cement, chemicals to some extent, pharma, obviously reported inflationary impact on their raw material costs, and therefore there were some negative surprises on EBITDA margins. Hello. Hello.
Yeah, okay, continue.
All right. There was some disturbance. I wasn't sure if somebody was asking me something.
Yeah, muted.
The one element that was negatively, and this happened, and this might sustain till Q2 of FY22, is the poor, what's called a spatial distribution of monsoon. So while on an aggregate basis, we had a 98-99% kind of number on normalcy of monsoons, there was some bit of spatial disarray, and which caused some bit of disruption in rural demand, and which has showed through in various sectors that reported the results in the December quarter. IT has continued to remain a very, very strong, area of growth. In fact, companies like Infosys, which were, a couple of years ago, not even reporting an 8%, 9% kind of growth, reported almost a 21% growth in US dollar terms. So that shows the size and scale at which the global, industry leaders are either digitizing or automating their products and services. The demand for cloud services, especially also because of COVID, etc., has resulted in a dramatic transformation of the demand. In fact, Infosys, which was primarily a product company, now almost 60% of its business comes from what we would call digital or cloud services. This has been a very, very linear growth story and remains a very powerful story over the next 3 to 5 years. And the kind of conflict that we saw in Russia and its impact on financial services networks also means that there'll be another layer of digitization which will happen over the next 2-3 years in core banking or payment transfers, etc., which can handle such sudden disruptions. So the Indian IT services remains a very secular kind of growth story. In terms of macros, the RBI surprised, I think, most players in the market, which have been expecting some bit of hikes, but the recent RBI policy maintains status quo, so it remains very, very accommodative, and I think wisely so, because there's a lot of ifs and buts around global growth. And with the Russian crisis happening, I think central banks across the world would want to remain accommodative in the near term, at least. While GDP did slow down in Q3 at 5.5% versus a 6.1% kind of expectation, it's also partly rural growth was, of course, one reason, but it's also partly attributed to the disruption caused by COVID related, which sort of spilled over into Q3 of last year. This could be transitory. In fact, the RBI and the finance ministry, and including even the IMF, think that in the Q4 we should report anywhere from 4.5% to 5% growth, which gets us back to about 8.5% growth for the full fiscal, which is expected to be followed by an 8.5% kind of growth next year, which is one of the highest numbers globally. To some extent, the GOI spending slowdown in Q3 also has been responsible. But with the budget talking about almost a 12-13 lakh crore kind of number being committed to infra spending, and in fact, the state support from the central government in terms of interest-free bonds rising up to almost, I think, 50,000 crores, means that this could also be transitory, and we are likely to continue to see a lot of spending in essential areas which lead to inclusion, like education, hospitals, water, railways, and services like that. So I think CapEx, while it did surprise on the negative side, but from a 2-3 year perspective, I think we can be fairly certain that this will add tremendous amounts of strength to the momentum in GDP growth. Services recorded its best quarter. Agri was slow, but that, like I said, special distribution could have been partly responsible for that, including there was a heavy pickup in Q3 on raw material input prices. I mean, things like urea and DAP, phosphates, etc., also substantial price increases, which could have also resulted in slowdown in the area under production. With deceleration, so we've had a dramatic growth in the Eurozone in the last 1 year due to partly the base effect of COVID. To some extent, that sort of stabilizes, it leads to strength in the rupee. So there are counter forces right now working on the rupee, which is the reason why we have not seen a collapse in the rupee so far. I'll talk about the crude part later, but broadly from an economic real exchange rate point of view, I think the rupee remaining stable shows the momentum that is available inside the Indian economy from even a foreigner's perspective. And gross GST collections have been above 1.3 lakh crores, I think, for the second month running. Even in January, we had about 1.38 lakh crores, which shows that the underlying economy continues to maintain resilience. So that's sort of the background in which the Russian conflict suddenly happened. So what's happened since then? I mean, we all know it's hitting the headlines that, commodities like wheat, food grains, essential food grains, because Ukraine is called the, breadbasket for Europe. And crude, of course, because of the disruption it can cause. Crude is up even when Russian oil imports have not been embargoed. I think last night there is some kind of announcement around that. So we could see negative surprises on crude over the next couple of days as well. So, crude is now, I think, close to about $116 or $117 last night. We've had, 1/3 of the global shipping fleet being disturbed. So anything which was, north of Europe has been completely disrupted. There's a technical default on Russian bonds, but I don't think anybody's noticed in the markets because it's a delay. Actually, it's not really a default. But it is enough. $30 billion is enough of a issue to rattle the markets, but so far, so good. US inflation expectations have negatively reacted. So in the sense that while the actual inflation in the US is registering, at 7.5% for the last almost 4 months now, which is way ahead of the Fed target, it also indirectly indicates substantial growth, which is a positive impulse. But what's happening is that because of the issues over the last few days, inflation expectations from a 2 to 5 year perspective have also risen. So it means that the Federal Reserve might have, if this sort of sustains, if this conflict sustains and such expectations sustain, then obviously there might be, which is ironic, but sharper than expected rises in the Fed rates. This could be one of the issues, but there's too little data to sort of, this is happening over the last 1 week or so. So we need to watch this number over the next month or so. So what's the worst possible scenario? So the worst possible scenario is that, inflation remains high, unemployment at the same time remains high, global, exchange of goods and services slows down, a lot of nationalism, sort of takes root because of whatever happens over the next few weeks. And, therefore we enter into that 70s kind of situation where India, we had that, 2.5%, 3% kind of Hindu rate of growth. The US was not growing. There was nothing happening, worldwide after 1973. Right up to, I think, almost 1986 onwards. It was a wasted decade kind of thing. So that's the worst fear for the markets from a market point of view or an economy point of view. My personal take, I mean, there are obviously only 4 or 5 scenarios that can happen with the Russian conflict. And given the scale, we need to worry about each of these scenarios. So the easiest scenario, obviously, is that there's a resolution. The slightly more difficult scenario is that there is a resolution in the sense of ceasefire for a couple of days, and then, or Belarus kind of, or Romania, or any of these, geographies sort of getting drawn into minor conflicts or skirmishes. The third scenario is that, we have a stalemate kind of a situation where Russia sort of takes over some territories and refuses to cede them. And you have, Ukraine sort of breaking up into, various zones supported by various pockets of the ex-Soviet Union, and therefore guerrilla type conflict lasting for a decade or so. There could be one scenario, I mean, the probability of these things happening obviously remains very low right now, but, a major conflict which sort of engulfs right up to Germany, because Germany has been very vocal about the Russian aggression. In fact, it's one of the most vocal. And sort of, Germany, France kind of powers get drawn into some issues around certain areas, geographically or economically. And obviously the worst case scenario, which is some kind of global conflicts, so, I mean, nobody knows right now. I'm definitely no geopolitical expert. Obviously the extremes are that any resolution happens, I think emerging markets would tend to react very sharply upwards because growth has been very, very sharp in emerging markets. India is just one of the, although India was the best performer and rightfully so, I think even, markets like Indonesia did very well, almost matched the US and India in terms of dollar returns. And if there's any delayed resolution, then there are additional risks, because a delay in the resolution also means that you have, these small little situations where, US-India relations could be strained if, we don't support them in particular votes, etc. What has happened in the UNSC. And increasingly there are many more challenges which happen, and India sort of has to play a defensive stand, and therefore, disturbs the equation, and China sort of, so I mean, all kinds of weird scenarios, right? So obviously any delayed resolution is not a good situation to be in. So these could be the negatives. The positives from the conflict, the way I read them, again, disclaimer that I have fairly little understanding of what's happening. I mean, I'm catching it on the media like anybody else, combining it with my understanding of history or how these conflicts pan out. When I read the news about that 40, 50, 60 mile long, Russian artillery forces moving towards Kiev, it sort of, I mean, it's unfortunate because it also means that there's a substantial conflict ahead, but it also therefore means that the Russians are not interested in massive bombing, which itself is indirectly and unfortunately good news. I mean, one of the fears would have been that, they would go for complete, decimation of certain pockets in Ukraine. That's not happened. In the last 2-3 days, I mean, from my reading of, articles on CNN, etc., it's also becoming clear that the Russians are making slightly exaggerated and unforeseen moves, not because the world is not able to come to terms with his plan, with Putin's plan, but it also seems that there's a lot of confusion in I think the expectation was that the Russians would overrun Kiev in a couple of days, right? That's not happening. And therefore, suddenly new, frontiers are being opened up in the war, which according to global political strategists shows that there's a bit of confusion in Russia. And because of partly that confusion, I mean, day before yesterday, I saw an article where one of the Russian oligarchs, one who owns the largest petrochemical refineries in the, ex-Soviet Union belt right up to Georgia, openly coming out against Putin and saying that this is a very, very bad move on part of Russia. So, to that extent, there could be possible, dissonance inside the Kremlin, which could possibly help resolve this conflict, in my mind. And the US has been, I mean, I don't know whether it's right or wrong, but the US has been fairly, controlled in terms of its commentary and its actual actions on the ground. I mean, they've not sort of gone beyond NATO allies in terms of ground presence, which, according to me, are positives and which point towards some kind of resolution soon. But like I said, I don't know. But this is my guess on what might happen. So in terms of Indian markets, what's happening? So the rupee has been stable, surprisingly. I mean, crude has gone to almost 120 USD, and the rupee has hardly moved 50 paisa in the last few days. We've also not only crude, but FPIs have been consistently exiting. I think the number would be closer to $12-13 billion since October, when they first turned negative. And even then, the rupee has not moved. So there's a bit of confidence around the rupee right now, possibly because of the $630-40 odd billion that are lying in reserves. And the controls on the capital account also mean that, we will not see the George Soros kind of episodes in India. And to the extent that FPIs threatened to pull out substantially, I think the DIIs have been proven to be equivalently strong buyers. So from a market point of view, while reserves may be challenged to some extent, I think from the market's point of view, we are reasonably okay in terms of flows, net flows into Indian markets. The Russian markets by themselves are irrelevant to India directly, because they hardly are less than 1% of Indian exports. And the one good thing that's happening is that in the last, ever since Modi took over, for whatever reason, you had almost $40-50 billion of FDI, which has nothing to do with situations like this, unless obviously it becomes a long-term conflict. So those kinds of flows are also supporting the current account, capital account. From a current account point of view, obviously we still remain a 20-22 billion kind of deficit per month kind of economy, and that's likely, especially when you're growing. And this might expand if crude sustains at these levels, anywhere above $120 a barrel. Another good thing is that while the Nifty looks very high at 17,000 odd levels, the fact is that the Nifty yield is about 5.2%, while the GOISEC is trading at about 6.8%. So which means there's almost a 1.5% differential. And historically, Indian capital markets and debt markets have sort of remained stable when the spread is in the range of 1.5%. So from that perspective, from a risk return trade-off perspective, I think Indian markets, both on the debt and equity side, are reasonably valued right now. There's not much to fear in terms of sharp corrections from that point of view. What are the factors that are supporting the micro? I think the rural workforces, which were disturbed right from March 2020 when COVID first happened, have been, sort of getting back into the urban areas, especially as construction activity has improved. And I mean, like I said, in Q3 results, a lot of commentators talked about construction activity resuming in key metros. So that sort of supports the hypothesis that, demand growth in urban as well as rural areas. So, I mean, less than 30% of rural demand today originates out of farm activity, right? So 60-70% is either services or ancillary activities, or people who sort of contribute to the rural economy from their, livelihood that they earn out of urban areas. So a return of activity into these areas also therefore means that, demand resumption should take place, what did not happen in Q3. Corporate profits had bottomed out. I mean, you saw metals companies, cement companies also. I mean, you take a broad swath of anything which was to do with, the core economy, and it was struggling, right? Right up to 2018-19. And most of those corporates have returned to very sharp profitability in the last 1 odd year. This is happening at a time when they have deleveraged, and at the same time, banks, because of whatever conservatism and because of COVID impact and so on and so forth, are actually sitting at near all-time highs in terms of the quality of assets. And this combination of strong corporate balance sheets and money available for future capex is happening almost after a decade or so. GOI capex, I already talked about this. I consider a transitory impact, and I think it will resume normalcy soon. There is the pervasive China plus one factor, which will ensure that India continues to get a favorable ranking for FDI in manufacturing and even services. And the regulatory support in terms of normalization of FDI in critical sectors like insurance, defense, etc., would help this further. Continuing FDI inflows, therefore, remains a key aspect. And this, as long as the Modi government follows its core policy of policy certainty, jisko no rollback bolte hain, I think this will sustain. Earnings visibility has remained very strong. So despite a tepid kind of Q3 and mixed kind of Q4 numbers being estimated, the visibility for 2023 and 2024 remains almost the same. In fact, almost about, I think, 70% of the Nifty companies saw upgrades of earnings for 23-24 despite negative surprises in Q3. So it means that visibility of market commentators on the next 2 years remains pretty strong. Private capex, which has been subdued for a wide variety of reasons. There are many factors which could, including global growth and, infra spending, etc. Many factors which could lead to triggers in this area in terms of capex. And global infra spends, especially, in, UK, Germany, France, and of course the US, which wants to spend a lot on building infra, would tend to give a lot of support to engineering and engineering good companies in India as well. IT, as I already said, I think has become a secular story for the next 5 years. I don't think we should look at results in the IT space on a quarter-on-quarter basis. From a crude oil perspective, I think the finance minister, the RBI sort of talked about 70-75 USD as the base case projections for 22-23, which has obviously been disturbed. So, I mean, every one USD, because we import about, I think, $4.5 billion barrels per day, million barrels per day, roughly translates to about a $1.5 billion USD annual increase in the import bill. So if you look at, 70-75, if it, we sustain it, let's say $100-$105, although that may also have other impacts, but from a current account perspective, that means almost a $40-45 billion increase in the import bill. But then vis-a-vis that, if I mean, minus the Russian conflict related impact, if the global economy is growing very well and the current account, because of our export surpluses, remains under control, I think this should be easily neutralized, along with obviously impact of PLI schemes and Atmanirbhar and so on. So, I mean, that's partly the reason. I mean, even if you look at $110 sustaining and, my oil bill increases to, let's say, about $60-75 billion, and which, if it's a temporary kind of situation for 3-6 months, I think the forex reserves are more than adequate to fuel this. I mean, we are at about 30 months of current account, deficit equivalent forex reserves. So it's a reasonably strong place to be in. There's one micro level factor. I mean, people outside the industry may not understand this much, but broadly, markets also, for the same event, 3 years ago, if the markets declined by, let's say, a 10-15% kind of number, I have been increasingly witnessing that events with even a slightly higher global impact or a local impact, markets are typically, succumbing by 2-3% and then recovering very rapidly. And one of the reasons I can trace it all back to is this low volatility is because SEBI has been taking a lot of, forward-looking kind of approaches to capital markets. So, intraday traders, which caused volatility in the Nifty, derivative traders, people borrowing in exaggerated numbers and take speculative bets on, and therefore drawing in a lot of crowd also into highly suspicious stocks, all those things which lead to volatility. SEBI has been actually sort of closing those gaps one by one in a structured fashion over the last 2-3 years. So from a froth perspective, I think the Indian markets have actually become extremely mature. They are unleveraged, and to that extent, people are willing to hold on because now so it's become a virtuous cycle, right? Markets are not correcting sharply, so people are coming back into the markets. and therefore markets are not correcting sharply, kind of virtuous cycle. I think very importantly because of what SEBI and RBI are doing in terms of deleveraging markets. From a Nifty perspective, like I said, the Q3, I mean the 23-24 estimates have not really suffered so far. Q4 may not, like I said earlier, may not move the needle much. So roughly in terms of numbers, today the estimates for 23 and 24 are roughly about 800 se 820 rupees on Nifty EPS for 23, and roughly about 900 to 1000 on FY24 numbers. So assuming that we take a, markets typically look at 1 year forward, right? So let's say we are at the lower band, 800 rupees pe lete hain EPS, and I take the average multiple for the Indian markets, which is 20.5 times. In fact, I've taken 20 times just for rounding off ease for everybody. Even if I take a 20x multiple on 800 rupees, which is almost 10% lower than the consensus estimates, even then we return to a Nifty figure of about 16,000 being a stable number from a 1 year forward perspective. So which means as long as we are around 16,000, which is where we are right now broadly, 200 point I think we are in an equilibrium zone. Even if we apply a 20% discount to this multiple, because during times of crisis, you can go to 16, 17 times on earnings. So I'm assuming, let's say, we fall to another we fall by about 4x, which is about 16 times PE, which was the number around 2008 in a crisis time. We would possibly go down to 13,000 levels, right? So my personal base case kind of scenario is anywhere from 13,000 to 16,000 in a normal volatile situation where nothing is like 2021, where you had a linear rally upwards. So I think we're in that zone where we can consider buying. Of course, when there's a global conflict, you have to be careful. And my standard suggestion is that whatever your greed or whatever your, enthusiasm, always keep 20 rupees as cash so that you don't have a debt to the broker. One, you always get buying opportunities because such market conditions, when the market is overall range bound, you'll have a lot of volatility. So you need to be able to ride it very well to accumulate returns. So always keep cash in your portfolio. But the rest of it with the large cap buyers, obviously, the one-way rally is gone. I don't think there's any factor in the near term which will lead to 7,500 going to 18,000 kind of scenarios. We are back in a situation where we'll be an earnings-led market, and in that situation, it is nice and necessary if you're not an SIP, because SIPs are always the best form. But keep 20 rupees cash and be slightly large cap or larger mid cap kind of focus with a view that worst case scenario we are looking at another 10, 15, 20% correction max, which is okay, because I mean if that gives you an opportunity to accumulate stocks from a 5-10 year perspective, I think you should be doing that. And if the Russian conflict becomes a world war, so anyway it doesn't matter what you buy, even if it's a fixed deposit. From a Prabhudas Leela perspective, our view, this was 10 or 12 days before the Russian issue became our lead analyst, head of research, Amnish, had factored in some bit of issues with crude because of the Russian conflict. Even then, his view sort of remains between an 18,500 to 20,000 levels. So, I mean, if you look at it from an overall perspective, we might have a 13-14,000 kind of downside fundamentally. Usse zyada niche jaane ka mere ko scope dikhta nahi hai, unless the Russian conflict is a much larger global level issue. On the upsides, we can easily go to 20,000, and no questions asked kind of situation might be created. I wouldn't want to talk about stocks too much. I mean, I can send this list to you, but broadly, not only because of the Russian issue, but also because of the underlying, trends in commodities, we feel that steel, aluminum, oil and gas, coal, etc., would tend to react positively over the next 2 to 5 years as the recovery. I mean, a guy like JSPL, who was a heavy debt, I think 70,000 crore company, has virtually become debt free. That kind of situation will ensure that the commodity cycle resumption, which we assume is the base case for 22 to 30 kind of next 8 years, you should be biased towards these sectors. Any corrections, you should be accumulating these stocks. And maybe, cement, auto, FMCG, you should be very, very selective because of a wide variety of reasons that I just named, including raw material pricing pressure, disruption in supply chains. We all know the semiconductor issue, FMCG because of rural demand, etc. So there's not too much backing these guys. So we remain large cap focused, and If you ask from a asset allocation point of view, from the stocks that are there on your screen right now, we would say that roughly about 50% of your portfolio should be in large caps, 30% in mid caps, and roughly about 20% in small caps. That's how we would recommend you holding these stocks. These prices are about 2 weeks old because I took them from the latest report, which came out on 18th February, I think. But the stocks remain the same even yesterday. No, our views have not changed. In fact, lots of these stocks, HDFC Bank is at 52-week lows. 1300 ke aaspas ka bhav ho gaya.
Sandeep, you have a few slides. Can you show them also? Because the screen
I don't
shows...
have slides on stocks. I can show you the names.
You have other slides in a presentation. Now we are seeing the pre-conflict situation for the slide.
I'm sorry?
And put it on full screen mode, your presentation.
No. So I have been talking. I was on this slide. Are you not able to see this?
No, we saw the first slide actually. The pre-conflict situation.
अरे sir, क्या बोल रहे हैं? मैं ये सारे slides आपने देखे ही नहीं है क्या?
Yeah, no, only the pre-conflict situation. But you had a good talk on those issues. Yeah.
Oh, I had all these slides. So
yeah, we know. But if you can,
let us go one by one, na?
No, so I already spoke all these slides.
Yes.
When you kept us involved, that was very good presentation. Still, despite slides.
We'll go briefly, point by point, maybe. Just briefly. And we can have a interaction on the slides.
Okay, fine. I'll do that. Yeah. All right. So this was slide number 1. This was slide number 2, the pre-conflict situation. Yeah, where I broadly said that we've had a very reasonably good, earnings kind of number, revenue, top line as well as bottom line kind of number on the Nifty stocks. And that IT has become a, secular story. Guys like Infosys, reporting substantially high revenue numbers. This slide essentially talked about how we are growing at, 8.5% kind of trending numbers for the next 15 months, global or even RBI finance ministry kind of estimates. And that, the government of India slowing down investments is a transitory factor. And it's like, once that resumes, GOI spending resumes, backed by a pickup in rural growth, we are looking at, a very, very sharp growth ahead, at least over the next 3 to 5 years. I touched upon GST collections remaining strong. Here, I had said that, commodity prices have increased substantially. Obviously, there's a challenge. Inflation expectations in the US have increased. So the worst fear is whether, we will enter into a 1970s kind of stagflationary impact. But that there are 4 or 5 scenarios, the extreme scenarios being that the Russian conflict resolves soon, in which case, we might hit 18, 19, 20,000 on Nifty, and emerging markets will rally, obviously, because earnings are strong. There's nothing backing. I mean, everything backs market momentum resumption. And on the other extreme, if the conflict is delayed, even if there's no global level conflict, the possibility that the conflict is delayed may result in a lot of, US, India, China kind of situations happening, which might sort of affect IT. These are the broad negatives. But then the positives from the war, I said, are essentially, that whatever's happening in Russia seems to be very artillery focused and not too much, cruise missile and nuclear talk happening. Global geopolitical strategists are saying that Russia seems to be confused with its recent moves in terms of deployment of troops and Belarus entering the war, etc., which was never a part of this entire situation till 3 days ago. Increased, powerful people inside Russia, who can directly impact what happens in the Kremlin, talking about Russia not doing the right thing, and US sort of acting in a very calm, controlled manner so far. I personally would have preferred a much more stronger show, but then at least this has proven to be a very calming factor. And therefore, these are the positives, according to me, which I see as factors which will ensure that there's no escalation. On Indian markets, I had broadly touched upon the fact that even though FPIs have been withdrawing at least $2-3 billion a month right from October, crude prices have increased. The rupee has broadly remained within a 75-76 kind of range, primarily because I think the market seemed to be presuming that a $630 billion war chest is more than adequate to fight any transitory shocks. So right now, the entire crisis is seen as a transitory crisis, which is a good thing and a bad thing, because if it turns into a much more deeper crisis, we might have some bit of issues around the rupee. But then the rupee seems to be fairly stable in the 76 kind of range. We are also increasingly not so dependent on FPIs. FDI is more important for us, and DIIs have powerful, surpluses available with them. And to that extent, markets have sort of absorbed all these shocks without really reacting too much to FPI sentiment. Russian markets directly are very irrelevant to us because there are hardly any, market for us. I had not actually, and so the Morgan Stanley Economic Policy Certainty Index, which measures, how foreigners perceive a particular government structure or a governance structure, India is at its all-time high, which therefore influences FDI very, very positively. And there's one more metric that we use typically, it's called the earnings yield gap. So typically when price earnings ratios, or the opposite of price earning, which is E by P, if it's higher than the 10-year bond yield, you see that as a major, disadvantage. I mean, you might actually expect an equity market correction. Traditionally, India has seen the GOISEC yields at about 1.5% higher than Nifty earnings yield, which is where we are right now. So from that perspective, we are in a sort of equilibrium situation. Here I talked about what might spur earnings, because like I said, earnings become extremely vital. What might spur earnings? So what might spur earnings is a lot of return of rural workforce back to, urban centers, to power construction and engineering and so on and so forth. We also have a weird situation where corporate balance sheets are clear, commodity prices are running very high. Whatever NCLT issues were there are broadly resolved. Banks are sitting on healthy balance sheets. All of this combination of factors, along with powerful economic growth across the world, is a first in a decade kind of situation. And therefore, you could see a very sharp resumption of economic growth across the globe for the next 5 to 10 years. The China +1 factor, the PLI schemes in the background, analysts not downgrading 23-24 estimates despite a Q3 tepid kind of quarter for certain sectors. These are all positives, which would result in sustenance of EPS earnings per share estimates, which I presented. The Indian regulators, the finance minister, international economic agencies like the IMF, etc., all believe that the dollar, the crude would be roughly between $60 to $85. Even OPEC had come out with a $70-$75 kind of target, right? So obviously we are sitting at $115, which is almost $40 away. Part of the reason why the Indian rupee may not have reacted so sharply, or Indian markets are not generally reacting so sharply, is that this would mean a $40, $50, $60 billion kind of impact if it sustains. And in that situation, having a 30-month equivalent of current account deficit as forex reserves is actually helping, even assuming that growth doesn't pick up. So to that extent, so far so good in terms of rupee or Nifty. I had also touched upon this slide where I said that one of the factors that I personally, as a person who runs the broking business, I am seeing a lot of froth having been eliminated. I mean, earlier you had people, they would give you $10,000 and accumulate stocks for 1 crore. I mean, that's it, massive over leveraging, right? So those kind of leverage situations have disappeared. Mr. Lalwani's mic is very high. Yeah. Should I continue? Hello?
Yes, sir. Yes.
Sorry. All right. Okay. And so therefore, a lot of regulatory changes that SEBI has brought in right from 2017 onwards, while it has made life for, brokers difficult. Generally, brokers like us who believe that, leverage is not the way to obviously create wealth, etc. For us, it's been good. I also believe that is partly the reason why, if 2014 the same news had come about the Russian issue, and in fact, it did come where, the Crimean invasion by Russia, markets would tend to react by 10-15%. Now, with the same intensity of news, the markets hardly react by, 3-4%. I mean, the entire fall that we've seen recently is because of multiple reasons. It's not just because of the Russian conflict, right? So I attribute maybe a 1,000-point fall to the Russian conflict. The rest of it I attribute to Fed tightening and so on, and technical fatigue, etc. So, when there's no leverage in the markets, what happens is that markets sort of, fall for a couple of days and then, sort of stabilize. So we don't have those sharp 5-10% kind of corrections like emerging markets typically have. So we have become a fairly mature market, which is also leading to a lot of stability. After having said everything, the fact of the matter is today we are at 16,000 levels, which is nothing but a, equilibrium level, according to me. We are not trading at, silly levels like maybe 2009 early or, during COVID times. I had then come to this slide where I presented the numbers for FY 23-24 estimates, where I said that, typically analysts estimate anywhere from 800 to 900 kind of earnings per share for Nifty stocks for FY 23, and similarly 900 to 1000 for FY 24. Currently, we are trading 1 year forward, we are trading at about 19 times, which is actually lower than the 10-year average of 20.5 times. So that is one comfort factor. The other comfort factor, I had talked about it, the numbers were not there, I did not realize, is that even if I say that FY 23, which is 1 year from now, FY 23, I do an 800 kind of number on EPS, which is lower than the lowest estimates, and I apply 20x forward to that, it should be at 16,000. The Nifty should be at 16,000 right now, which is where we are, right? So in a sense, we have sort of assumed a worst case scenario for growth for the next 1 year from an Nifty earnings point of view. Still, I should be at 16,000. Even in this worst case scenario, I assume that the Russian conflict sort of becomes a very large conflict and goes slightly out of control and all that. I fall to maybe 13,000 levels. So then I said that, if I'm going to be range bound in a 13, 16,000 kind of scenario, which is my worst kind of scenario, where everything is going out of control and the economy is not growing and the Russian crisis is sort of going on and on and on in various forms. Crude prices are high, commodity prices are high. So I said that broadly, if you can keep 20 rupees of cash in your portfolios, obviously you should buy a bit of gold because gold at any point of time, gold is a very boring thing to do, but 5% of your portfolio should always be in gold. Gold tends to react very sharply and very quickly, so you'll never be able to catch it. So if you have a 10-year perspective, definitely keep 5% of that in gold. And gold right now also has not done much. Gold can theoretically do $2,400-$2,500 very easily, any point of time. So I said that if it's 13,000 levels, if you've got 20 rupees of cash, don't shy away from buying our top stocks. Here, I said that broadly, not because of the Russian crisis, but generally, anyway, our assumption was that this is the decade for commodities. And therefore, this is the decade where you should be in bias towards, steel, aluminum, oil and gas, coal, basically energy related areas, and possibly staying away from, things which are impacted negatively by these things, which is like cement, auto, FMCG, etc. And then I had listed out our top stocks, and I had said that each of them have their own story. These are the list of top 10, 12 odd stocks. Each of them has their own story, and I can forward it to you if you want. But these are the stocks that we recommend. Our preference is that you should remain 50 rupees of your portfolio in the large caps, roughly about 30 in our recommended mid caps, and 20 rupees in our recommended small caps, all from a 1 year perspective. That was briefly the presentation, and this is the think tank disclaimer. That's all I had to say.
Excellent insights. You've done a deep dive into the geopolitical situation and also the resulting inflation trends, which are moving higher than the early trajectory. Earlier, market was looking at the FOMC rate hike. There was one theme. Yes. Now it is a multiple theme. Correct. Now, looking at the markets, often Nifty becomes on a day-to-day basis a reflection of the Dow. Overnight trends, people look at it, how it is fluctuating. In fact, 10 days ago, there was a time people were spending midnight looking at what it is happening. What is your call on the Dow? You are given a safety level for Nifty, maybe 13,000 in the worst case scenario, but still maintaining a bullish trend. 18.5 to 20 gives a lot of confidence. Like people say, war, when that cannon is being fired, is the best time to buy. And today there are attractive things also. But what about Dow? How safe is it? And what is the upside, downside expectation? You look at it from the near-term perspective.
Say the Dow,
Dow we had NASDAQ both.
NASDAQ is, I think, actually going to correct very sharply next week. This is a technical view, not a fundamental view. Just this morning, preparing for this presentation, I quickly had a look at charts. I think we are looking at a sharp correction in the NASDAQ starting next week, is my personal view. I think the Dow, for now, we can assume that we might easily go towards a 31,000 kind of level, which is another 5-6% from here.
So that means tough times to come.
I don't know whether it's tough times. See, the Dow has had a one-way rally, right? I mean, right from 2010 onwards, or maybe late 2009 onwards, we've had a one-way rally. Even in the last 5 years, I mean, the Dow almost doubled, right? So, I mean, 5-year doubling is a 15% CAGR. Earnings have been growing at 14% CAGR. So it's a sensible thing to happen. But now, increasingly, with whatever's happening globally, especially the supply chain shocks, etc., FOMC raising heights, I think there's some bit of deceleration expected in the US. So if you assume that growth will over the next 1.5 odd years, the Dow relative earnings growth would slow down to about 8 or 9% in the general consensus. I think 33, again, like India, I think a 33,000 level on the Dow is a fairly justifiable level. So if it corrects, I mean, there's nothing you can do, right? I mean, anything can make it correct. But if you are trading at current levels on the Dow, while I see a 5-6% kind of correction, but then you're not really bothered. I mean, 5-6% in USD terms is hardly anything when you've doubled your money over the last 5 years.
Okay. Then next thing is what came out from your analysis. You talked about this decade belonging to commodities. Commodity investing in stocks is considered quite highly risky because it is highly cyclical and it is very difficult to predict the cycles. So does it mean we see the smart investor should move? Normally in a tough market, people like to allocate more money to FMCG, pharma, IT. And incidentally, IT has done very well in the last few months comparatively. And metals has done well for the last 2 years. But today we see the decade. We are talking about apparently a cycle or a super cycle in favor of commodities, right?
Correct.
We talked about metals, crude, mining. So does it mean we should, and metals have not corrected significantly. We see many stocks, whether it is Tata Steel or Vedant, at their practically all-time high. So should a smart investor, because it is moving and a super cycle, should he use the opportunity and start allocating greater percentages towards the commodity stocks and move out from IT and FMCG pharma?
No.
What do you look at it?
So 2-3 comments here. One, it's not so much. See, there are 2-3 things overlapping, right? One is the underlying cycle. So the underlying cycle. I don't know whether it's difficult to predict, but from a 1-year perspective, I think broadly you can catch the trends. Prabhudas Leeladhar, I mean, for example, we turned bullish on commodities right from in the middle of the COVID crisis. Okay. Now that is because of whatever reasons. I mean, sometimes it could be capacity shutdowns. Sometimes it could be demand resumption. Sometimes it could be intrinsic factors affecting individual corporates, right? So you had NCLT resolutions, etc. You had a lot of excess capacity evaporating even in India. On the other hand, you had a sharp uptick in infra spending, right? So it's not so much the commodity cycle; it is also what's happening to the global economy at large. Number one, or the domestic economy. Number two is that is exactly the reason why Prabhudas Leeladhar exists, right? You might not catch the commodity cycle; nobody can, I think. But if you have an underlying premise that is a decade long or a half a decade kind of long cycle, the challenge is, I mean, you can buy commodities, but the real challenge is actually picking up the stocks. So which is why we have a 35% research team, right? So when we are saying today, for example, you buy a JSPL, which is one of our topics that I mentioned on the screen. Now JSPL is, the recommendation of JSPL is predicated on the assumption that it is the largest play in India on economic growth resuming, right? Turnkey oil refineries, windmills, railways, defense, construction. So if you have a constructive view on the Indian economy, a stock like JSPL, which is virtually debt free, attractive at maybe a 42 times kind of price earnings, virtually debt free. You are expecting government of India to resume a lot of activity in terms of capex, etc. And our fundamental analysts put a target of about 500-600 rupees. Now it's available at about 350. So you've got such a strong kind of buffer. So you don't buy JSPL because of commodity cycle. You buy JSPL because you have what is called a sharp buffer from its underlying valuation. 500-600 की चीज आपको 350 में मिल रही है, right? So we are not catching only the commodity cycle. In fact, it might affect it negatively. We are catching the policy cycle, and within that policy cycle, JSPL is very well placed.
And auto, you mentioned slightly tough times for that.
Auto, two-wheelers definitely. Auto two-wheelers definitely. One, because we've had a large, pent-up demand disappearing in 2020-21. Two, growth not sort of picking up evenly across the space. But frankly, if you ask me, Hero Moto kind of stocks, agar aapko 2300-2400 mein available hai, any time of day I will buy Hero Moto. But then that is a speculative bet. Earnings are not backing it. There's no visibility right now. You might want to buy it at 250 when the visibility has appeared. You might venture into it today at maybe 2300-2400, whatever was the rate yesterday. I personally like Hero Moto a lot because I think it's one of the best R&D stories available in India. And it is not so much a communication. What's the word? Conveyance vehicle manufacturer. It is a style vehicle manufacturer increasingly. So I would buy into it. But auto mein we have Ashok Leyland, Mahindra and Mahindra as our top pitch. Ashok Leyland, according to us, should be at about $180 in a fundamental sense. Available at 120.
What made the market little nervous, particularly last week, is FIs have been selling on a higher number, and often sometimes FIs sell the most liquid stocks or where they have good weightages if they need money. And particularly HDFC Group, which was known as one of the safest and best performer. All the companies in that group have touched effectively the year's low. Maybe people are saying FIs are selling because they need money. But does it give a great opportunity to the Indian investors, because FIs are selling a limited purpose for their maybe immediate dire requirements for certain change, and ultimately they could come back in a bigger way with attractive valuation on the market after the conflict is resolved.
Absolutely.
And it seems your team, which is looking at sectors and stock specific, is, in spite of knowing the situation of geopolitics and inflation in crude, they are quite bullish on the market when they talk about 18,500 to 20,000 is really fantastic, mouth-watering returns.
No, so like I said, this report that I'm quoting came out 10 days ahead of, 18th February, right? The real issues in Russia started about 25th or 26th. However, having said that, I again had a chat. So like I said, if everything remains normal as expected and the Russian conflict does not go on and on, our Amnish still maintains that 18,000 level. All right. I showed you the worst possible scenario where two things happen. The Russian conflict remains a perennial kind of conflict, at least for the next 6 months. And companies surprise on the downside because for some funny reason, the Indian economy is not delivering what it's supposed to. Then we are at 13,000. So broadly a range of 13 to 20,000, which according to me, 2,000 ka downside ho or 4-5,000 ka upside ho is a no-brainer.
And looking at the new shift in circumstances on the global economies, with Russia getting out of favor, China became out of favor from US and Europe as a country and allocation of money. And now Russia is doing, and other smaller countries like Brazil and all are not, they have their own internal situations on currency, etc. Does it mean that India gets ahead of the league tables and huge investments can come back from FIS?
Absolutely.
Because they don't have much of a choice if they want to diversify their assets.
Yeah, absolutely. So there is talk of Russia, in fact, being dropped from the MSA indices completely last couple of days. that might impact, that might impact us positively in terms of our weight on the MSCI emerging market indices as well. But you're right in the sense that so far we've been talking about China +1. It looks like it might very soon become BRICS +1.
Right.
Yeah,
So
yeah, Sandeep,
India, yeah, Mr. Narendra, yeah, your
Yes.
thoughts.
No,
on
no,
what you would-
Sandeep
Yes.
Raichur, I think he spoke very well, and he has put not only the overall macro and micro aspects, and in terms of the sector also. My one question is, US will be completely reducing their what you call the bond purchases, and they are also likely to, because shortly they may not they may increase the interest rates. Whereas India has not recovered even now up to the expected level. So the RBI has been following a story of continuing with the accommodative policy, low interest rate, because they want the growth to be stable and it should lead to a better demand, consumer demand and all. So in spite of every time the market expecting that RBI will increase the rate, here they are not increasing.
Correct.
So whatever our Manoj B mentioned here, that foreign institutional investors will bring money, because there is an element of some what you call hot money also coming here. So the moment the US reverse the interest rate in terms of enhanced interest rate and stops asset purchases completely, the money is likely to move irrespective of this tension and all that. So in that respect, other side, if the growth picks up, the bank liquidity also will likely to be utilized for further credit growth, which has already started, and the private sector investment also may start. So now what private and institutional saving alone giving support to the market here in terms of buoyancy, I think that has to get definitely balanced. Whatever may be, it cannot wait in that type of liquidity driven and low interest rate driven market. It has to be definitely correct. So in that, I wanted his opinion.
Sir, in fact, you asked the question and you have answered it. So
I would like to acknowledge Mr. Narendra is on the board of top companies, and also
Yes,
has been MD and CEO of top well-known banks.
thank you so much, sir. And very, very nice. So then you understand completely, sir. You, in fact, answered yourself. You are absolutely right that the counter, see, today we have SIP inflows, which are about $1.5 billion a month. Bina pasine ke, right?
Yeah.
You have, the likes of SBI and ICICI Bank today, and the numbers, 12 to 14% capital adequacy ratio. About 4 months ago, the RBI latest stress tests on Indian private sector banks revealed that now, not only private sector, including public sector banks, revealed virtually no stress, right, across the board. So in that perspective, right now, what actually matters is, from a market point of view, what matters is that earnings are provided support, both from a monetary policy point of view as well as a fiscal accommodative environment. So from that point of view, the support that is available is and the other element is FDI. FDI, which I mentioned, the FDI index, the sentiment index towards India at its all-time high. Between these two factors alone and the fact that SIP $8 billion hai, there is no reason for us to actually worry about hot money, because hot money will always remain hot money. You can't change the nature of hot money. जब हम लोग भी invest करते हैं तो हमारा भी hot money है. वो बेचारे उनको ही blame करते हैं hot money के लिए. So the fact of the matter is, we have now become, I think, a fairly evolved market. Increasingly, we are getting to a situation where artificial falls in the market, which were engineered because one broker collapses, one bank collapses, those kinds of situations are not likely to be encountered very soon. And as long as that doesn't happen, the markets will remain stable, because market stability is not sentiment only, it is also the market infrastructure ka strength.
Okay, और एक Sandeep ji, that another area that oil price, the budget has been estimated at the rate of $75 per barrel, and they estimated a nominal growth rate of some 11%.
Yes.
And if the inflation, they think that it will come down to 3.5%.
4%.
Now,
yeah.
if the oil is now 120 plus, it may be vary. Average maybe still it is definitely 90 plus. So in that respect, our nominal growth as well as our overall growth, which all started revising downwards. Second, other side, definitely inflation not likely to materialize to the extent RBI has expected. It has to be now will be on the higher side, and RBI never came down below 6. In a sense, last 2-3 years always they are in that 200 plus, 4 plus 200 whatever. Now in that situation, that means some of the these increased price are not really passed on to the overall consumer, and when it starts, the inflation will be higher. So in that respect, even now I think we are not reached the pre-COVID level of our GDP in spite of all this growth. So the overall 5 trillion and all will definitely get postponed. But what would be our situation in the next 2 years in terms of the growth?
Sir, so I mean, see, last week IMF came out with its growth projections for India for FY23, revised growth projections.
Yes.
And for FY22. So FY22, they said that instead of a 9.1%, they're expecting about 8.4 odd percent.
Yes.
Which is exactly the same number which the finance ministry talked about in the economic survey.
Economic,
Right?
8.5. Yeah.
Correct. Now, if in Q4 we grow at about 4.5-5%, see, we grew at 5.5%. If we grow at even 4.5-5%, we are likely to beat the 8.5% estimate. For next year, you are absolutely right. The breakup is about 11.2% or something in terms of nominal growth, which is funded by 3.5% inflation, roughly about 8% GDP growth.
Correct.
This is 8% GDP growth. Ke samne IMF has come out with a number which is 8.4% GDP growth, right? Primarily predicated around the COVID issue resolving itself. You know, so even if lockdown cease, workforces return, accommodative monetary, I mean, by accommodative, I mean 50 basis points increase karna is not, I consider still accommodative, because you know you have got the pricing power to pass on the cost, etc. You are still looking at aram se 8 to 9% kind of number. Even in COVID, when I mean the worst possible thing that could have happened, I mean we were virtually in lockdown and there was panic and chaos. I mean there was nobody on the road. You suffered a 6.5% decline, right?
Yes.
Versus an expectation of 11-12%. So by its whatever reasons, I mean there could be 1,000 reasons for it. The fact is that the Indian economy has more to gain in terms of its upsides rather than its downside. So if we remain a pretty benign kind of situation, nothing goes wrong politically, etc., I think 8-9% ka number print karna amidst a global growth situation is a fairly easy number for India to achieve.
Yeah, okay, that is good. Only thing, bond market may be concerned with the massive borrowing of the government and particularly
so that's because so usme bhi two things happen. One is the Indian government has taken a very bold stance, you know, instead of a 3.5% targeting on fiscal deficit, remaining at 6.5% during COVID times, you know, is essential. Two, please remember that bond yields have two components, the absolute bond yield and the relative bond yield, right? Yeah. Now the relative bond yield ke liye, India has increasingly opened up global markets to borrowing. It's not just Indian banks and treasuries, right? Number three, as long as credit demand pickup doesn't happen, India is right now sitting on Indian banks are right now sitting on excess SLR and CRR, right? So kahin na kahin there will be these countervailing forces. Chota mota reactions aayega, you know, but you know, when your inflation, so sir, you being a banker, you know that roughly a 1% kind of differential spread has always been an equilibrium spread, right?
Right.
So if inflation, let's say trends, I mean, I'm talking about CPI, if inflation trends at about 6.5%, then GSEC should be trading about 7.5%, 10-year GSEC, which is maybe about 60-70 basis points higher from here.
Higher.
Which is okay, which is equilibrium.
Yeah, वो तो RBI को इतना borrowing manage करने में, they have to slowly give that rate.
And two, remember that is exactly the reason this crowding out they don't want to do is why they've been constantly talking about PPP and divestments. Correct. As one source of funding, right? So
government will not depend only on this borrowing. They have to have that asset monetization and disinvestment also.
Absolutely. Air India ke baad
ये कभी का ये situation निकल गया तो government will be aggressive in that.
Absolutely, and to some extent, inflation increases government spending by whatever 1-2%, but at the same time, tax collections में भी buoyancy आती है.
वही है, टैक्स इन्होंने बहुत what you call conservatively estimate किया, तो वो भी buoyancy उसमें provision है,
उसमें बफर है.
तो anyway हमारा आपको बाद में कांटेक्ट करेंगे, हमारा भी एक सेमिनार रहता है in N-Cube collaboration. I found you are really good, आपको बुलाने का है.
Yeah, we will do.
Yeah.
Sandeep, a couple of points, quick ones.
Sir,
Your take on
I'm Manoj bhai, like I said,
Yeah.
I have that 11:45. There are some very senior people
fine.
who are,
Fine.
if you don't mind,
Yeah.
to everybody, I would apologize, but I had indicated that 11:30 was my sort of
No,
deadline.
wonderful,
It's
wonderful.
11:45. Huh?
Yeah.
Thank you so
excellent.
much. But sir, if you want, you can WhatsApp me, email me, anything that you want, and I would love to respond or reply.
Certainly. We'll get to it. Now, Mr. Narendra, I would
Thank
like
you so
to
much,
have your
sir.
insights on the NSE. We are doing a deep dive into the National Stock Exchange, fundamental analysis, and also the trends. And there are lots of developments on the NSE. Every day people are talking about NSE. Your thoughts upon it, and then Vikram will do a deep dive presentation on NSE. I want to set the tone and expectations.
हम तो I will not talk any specific thing, but I am sure NSE is also advertised for a new what you call managing director, and they will be definitely will be searching for a very able, particularly technology oriented and capital market related experience, and right person for the not that current MD also, okay, maybe his period is getting over. So that continuity of NSE playing its dominant role in terms of what you call the enabling mechanism for all types of instruments of capital market, stock market, or stock and other things, that will continue. And the performance of the National Stock Exchange, these leaving aside this temporary whatever setback, that will continue to do very well, and that has got all the strength. And whatever other issue coming from the regulatory angle or external agency angle, it is a in relation to certain things which are related to some past, and the past is not in anywhere having any indication for the current the performance. So there may be whatever is there that they have to, the new MD and even the new regulator in SEBI will definitely take tough action if at all any gap is there in corporate governance, in compliance with the rules and regulations, or in terms of the competency of the people handling different departments, or in a technological overall integration of the functioning. If there are any gap, I am sure that will be the first priority for both that the NSE as well as the SEBI regulator, and the loose ends have to be, and I want to be curbed, and that I understand that the having already been a member in the your SEBI, the new MD, a new what you call SEBI chief, she is very competent, and she has also has a very good IT background, and she is tough in all what you call decision making and actions also. So I think that aspect it is a continuity there. It has been a very good selection, and the NSE also I found that they are also advertising for a new person. But both this and some of them, if anybody has been found fault, then naturally they have to face the consequences. That will be done. So overall, your question is, the Indian stock market has really matured, and the stock functioning and the governance and other things from the various measures taken by the regulator, as well as the both the stock exchange by BSE and NSE is robust. So I think in that respect, the market impact on that, as well as the overall current in terms of their performance or financial results or profitability, I think there will not be any impact. And I think the new poor leader coming there, NSE, will also take steps for the IPO, which is pending for quite a long time. Yeah.
Wonderful insight. So our system is getting stronger and stronger, and
Yes.
good to see a new a person at the help in SEBI with hands-on experience in
Yes.
corporates and banking, who understands the markets, and
Yes.
also NSE with the governance issues, action being taken, and a new, very strong person coming at the helm. We do a deep dive on what is NSE, their disclosures, their annual reports, the half-yearly performances. Are you ready, Vikram?
Yes, Manoj.
Yeah, Vikram, we'll have your screen. Vikram, you are a professional who, besides looking at secondary stocks, everybody knows the prices, loves to do a deep dive into unlisted stocks, unlisted zones, unlisted exchanges, till they get listed. And today we are selecting one of the large companies, in fact, the exchange itself. Their financials, of course, they provide a platform for trading. We look at NSE itself, their balance sheet, their half-yearly disclosures, including they had even filed a draft RHP. They wanted to get listed and be among the largest market cap and exchanges in the world. We are already number one in derivative trading, right?
Yeah.
Yeah, Vikram. Yeah.
Sure.
Please share your presentation, and we'll have an interactive session on NSE 360-degree appraisal and view from all the angles, starting with financial.
Sure, Manoj. Okay, thank you very much. Thank you, Manoj, and everyone on this platform who is connecting all the members of the market, intermediaries, and all, to gather the data and to share this knowledge. So this is really very good, and I'm very excited.
Put it on full screen mode, no? Vikram, put it on full PPT mode.
Yeah. Yeah, we'll do that. Yeah. Is it better? Hello? Yeah. Now you can see that?
Yeah, it's proper now.
Okay, perfect. Thank you. So let us quickly get into this. Before that, just a quick introduction of myself. So I am last now 21 plus years in market, and was there on both buy and sell side, and last 12 years plus dealing into unlisted markets, private equities, pre-IPOs and all that. And we have also dealt into NSE shares also. So that's a quick introduction. These are the important disclosures of think tank. And apart from this, another one disclosure that I also hold NSE shares directly, indirectly also. Okay, so let's just go through the brief of the introduction of exchange. Although it is not required, but still we'll still have a few minutes on this. So NSE incorporated in 1992, and then it got a lifetime recognition by SEBI and Government of India. It is the leading stock exchange with the highest ever turnover from since 1995. And now so basically in India, we have 3 exchanges. So the oldest one is our BSE, and then NSE, and then we have a Metropolitan Stock Exchange, which was earlier known as a MCX Stock Exchange, MCXSX. And now, so NSE, it is the first exchange in India which has provided the screen-based trading, modernized, fully automated screen-based trading through their platform called NEAT, National Exchange Automated Trading. So what kind of products NSE is providing? So capital market, cash, equity derivatives, index derivatives, currency derivatives, and interest rate futures, currency futures. It is a market leader basically across mostly all asset classes in India. NSE has become the world's largest trading exchange in terms of derivatives contracts. And this is now the last 2021, it was in consecutive 3 years, it is holding this position. NSE Emerge, which is basically their SME platform, has now got more than 200 plus listings. NSE has also launched a request for quote platform. And recently, just last, as we are talking, yesterday or day before yesterday, NSE has also launched a US trading also, trading in the US stocks also. So it has just started with a few stocks. We'll take it later, just 10 stocks. Now just go, we'll just see how NSE is big in terms of the percentages in the market, global market shares. So if you see derivatives trading, NSE is having 21% market share. The second one is Brazil's, which is not even very near to NSE. And then there is CME Group. Then there is then China and all, they are having less than 5% or near to 5% kind of thing. So this is really a proud moment for all of us. NSE, and consecutive 3 years NSE is holding this position. Let us just see how big is NSE. So as we discussed, it is the largest derivative exchange. It is the largest exchange of India and the world's 6th largest economy. It is the second largest derivative exchange in the world in terms of currency futures trading. It is the 4th largest exchange in the world in capital market cash segment. 4th largest in the terms of a single stock future. 7th largest in the world for single stock option. 8th largest in the world for index future contracts. 8th largest again in the terms of interest rate futures, and 10th largest in the world by contracts traded in long-term interest rate futures. So overall, NSE is it's really kind of a most of the all segments. NSE is having a great market share and market leader it is providing. Now let us just have a look at who are holding NSE. So as you see, the it is totally institutionally holding by 76%, where the banks, venture funds, insurance companies, FPIs and other FDIs having a stake. Then body corporate individuals are having some around 23.37%. The top shareholders of NSE, of course, it is LIC. Then there are stock holding is there, SBI Caps is there, State Bank is there. And earlier, ICICI Bank, IDBI Bank, UTI, UCO Bank, they were also holding some stake. And then currently, if they are having some stake, or they have recently they have sold off also last 1.5 years back. These are the NSE's subsidiaries and associate companies, where NSE is having 100% stake. NSE Clearing, Investment, Indices, NSE IT Limited, NSE Data Analytics, Infotech, NSE Academy, NSE IFFC, which is basically has started a US stocks trading, and NSE Foundation, then Auja Cyber City, Telspread, Cognizant. Then the associate companies NSE is having in Market Simplified, NSE Governance, Power Exchange, NSDL, Receivable Exchange. And recently, last year, NSE has exited from CAMS also. Yeah, so this is the board of directors NSE is having. So Girish Chandra is a Chaturvedi, he is chairman. Then Vikram Lime is ex IDFC. And then these are the independent directors. We'll just go through the profile of these two key persons. So Girish Chandra Chaturvedi, he is basically chairman of NSE. He is a ex-IAS officer, was there on various boards of LIC, Canara Bank, Bank of Baroda, IDBI, and also was there in the government as a chief secretary also he was there. Vikram Lime, as we know, before joining NSE, he was there at IDFC. He is MBA, he is chartered accountant. And he is also having a vast experience. He was also there in ENBI and Citibank before this. These are the key personnels of NSE, and of course the auditors are PwC. As it is very important to understand this, what happened because of this issue of that Chitra Ramakrishna. So we just thought to just give you the current remuneration structure of NSE. So currently it is having only very the key managerial personnel, they are getting only 14.76 crore, where the earlier it was the numbers were very crazy. This is the financials of NSE, how NSE has grown for last.
One point we discussed, they are advertised for a position of a CEO. So is what about the current CEO? When is his term getting over?
I think Manoj, his term is getting over in a year or two time. So they are looking into the succession of Vikram Lime.
So
and
would
also
completing his term, or there is another issue, and as soon as the new one is finalized, he will take charge. Any clarity on that?
So Manoj, I don't have that clarity as of now on this, because of this what recent developments happened in NSE. So but one thing I am very sure is that the government or SEBI, they will be very caution of appointing a new person, and how they can put a control over the board also, and how they make this corporate governance more transparent and more strengthened, so that the issues which happened last, it should not get repeated. So
Yeah, they
yes,
will
for
take,
sure.
they will, for a search of a new, what you call MD, it will take
Yeah.
at least 3 to 6 months, because not so
Yeah.
easy.
Right.
I just saw the advertisement in the newspaper about this.
Okay.
I think it's the replacement of Vikram Limier, which will happen in 3 to 6 months, definitely.
Okay.
It's not that there is no succession kind of thing.
Okay. Okay, Manish.
Yeah, it is a direct new person coming. Yeah.
Correct. Yeah, rightly you said, it will take at least 3 to 6 months time, so
Because
that they can
Vikramji,
finalize this thing.
Vikramji, a strong capital market man with a lot of knowledge on the capital market, of course, we are not with reference to Vikramji, he was in IDFC and all. That is a infrastructure related and all. But here they maybe after all this, they would have found that there is a person who has so much knowledge on the capital market, regulatory guidelines, or the ecosystem coming in the abroad, and with that much expansion of, as you said, the subsidiary and activities, it is not easy to manage unless somebody who is really knowing all that. That is the intention, to get a new MD and CEO.
Correct.
It will be
Correct,
very
Mr.
interesting if Mr. Ashish Chavan takes interest. He has done a lot of work in NSE earlier, and has been doing lots of work in taking the stock exchange to greater heights, including trading of foreign stocks on the Indian exchanges. Let's see who applies and who gets selected.
Okay, so we'll move on to the financials of NSE into that. So this is the NSE's 4-year track record, where how the PAT has grown from 1,461 crore to now the recent one around 3,500 crore. Last year, one thing has also happened with NSE is that they have sold a stake of CAMS. So NSE was holding stake, some 37.5% stake, which NSE has sold. So that has also impacted its last year's earning. So this is the NSE's PAT growth and EPS growth. EPS has grown from 19 rupees to now 72 rupees. We'll just look into the how the margins have been grown. So if you see these operating profit and operating margins, they are growing from at least more than 60% over year on year. EBITDA is growing more than 65% year on year. The PBT, profit after tax, is growing 60%. The last one was at 74%, as we just discussed about the exit of CAMS. PAT is growing by at least 40% year on year. So this is consolidated FY21
उसमें आपने
analysis.
कैम्स
Yeah.
बताया, कितना अमाउंट था सेल में?
It was around approximately the net of around 1800 crore, somewhere around.
Oh, then naturally that profit has gone
Yeah.
up. Correct.
Yeah. So total revenue for last, this is the consolidated last year's revenue, which is revenue is up by 59%, income is up by 60%, the operating income is up by 90%, and the book value of NSE has grown from 174 to 235 rupees. Net worth has grown from 8,600 to 11,600 crores. So these are basically unofficial data which is available, as we have seen. In fact, last, I think, 6 years, we are also dealing into NSE shares when it was around 900 rupees or maybe less than that. So how the price have moved for last 2 years because of this CAMS exit, and also there were plan for NSDL's IPO also, which is still on hold. And
So ये कौन बेचते? And a market without that, no, who will sell? That some individual selling or who sells?
yeah. So this is, see, all these deals are basically happening on a OTC kind of a thing, over the counter kind of a thing, where the buyers and sellers have been come together, and they have been sold these stocks through people like us. So I am also part of one of the intermediary. We are doing this last 12 years.
Okay.
Apart from NSE, we have 250 plus multiple stocks. So NSE has traded in the range of last 1 year. If suppose I am taking it, it is traded in the range of 1500 to its peak of 4000 also. Because of this last issue which has come up of this last MD, so the price has gone down to 3200. Currently, it is trading in the range of 3200 to 3400 kind of thing.
This is a chart as on which date?
This is a chart as on Jan 1st.
Okay, and what was the price as of then?
It was there that time. It was around 3500 to 3800 kind of a thing. Because see,
Now
it
there is
depends.
a lot of supply at 3,300,
Yeah,
350 levels. Lot of supply,
yes,
and there
lot
is
of
very
supply has
little
come up.
demand.
Yes, correct. So
Maybe
all these
because of the
supply,
controversy.
yes,
And when the numbers come up, maybe
Yeah.
the FY 21-22 results,
yeah, correct.
they should be very good because of huge volumes.
Correct. And mostly the what we have seen is the mostly the selling has been done by FIA also. So there were 2 FIAs they have sold, and we have a mandate of another 40 lakh shares available to sell. So because of this last issue and compliances issues, and again the issue of this Russia-Ukraine, so it has triggered NSE's price down by 800 to 500 to 800 rupees. So to compare NSE, see, we have see, it is very unfair to compare this with BSE because of large market share and all, but this is the only exchange available to compare with. So if you see the numbers and all that, so BSE is trading at around 44 PE and NSE is trading around 4600 PE. If I have taken a 3300 approx kind of a price, which is currently trading on. But definitely on the part of revenues and PAT and all, we literally cannot compare BSE and NSE. NSE is far ahead than BSE. And,
Are these standalone numbers?
These are consolidated numbers.
So this includes the numbers of CDSL for BSE.
Yeah, correct.
And NSDL for NSE, right?
Correct.
Consol.
Correct. Yeah. And the third exchange anyway
नहीं
it
नहीं,
is
आज
not
का
yet
सब्जेक्ट
operated.
BSc का नहीं है, but I am
Correct.
asking where the BSc is lacking there.
BSc is mainly lacking on the volume side. So
Volume.
if you BSc is mainly lacking on the volume side. BSc is also started futures trading and all that. But if you see 95% or I would say 100% of future trading is happening at NSE only. People are trading in Nifty only. They are not trading in Sensex. So BSc is still lacking on the volume side. BSc has its own pros and cons. So, and the most important thing which BSc is having is the highest number of listed stocks. So that gives BSc's good momentum. Whereas NSE is having close to around 2000 stocks, 2,200 stocks listed on the exchange. So if you the main clear comparison is the volumes only, volumes on the futures.
Thank you.
So there is huge potential for BSc. They have sent in a technology platform. And earlier BSc used to be restricted membership. People had to pay over 1 crore, 2 crores to just get membership. And NSE membership was much easier and cheaper.
Yeah.
So is it that, do you have the membership numbers? How many members in BSc, how many in NSE?
Manoj, I don't have that numbers, but yes, what I understand from market is that yes, BSc has now become more flexible, even if with, I think with around 20 lakhs of net worth kind of a thing, you can become a trading member. So the lowest one is the trading member, then there is a trading plus professional clearing member, and then there is a trading clearing, and both you can do that. So BSc has now given lot of relaxation on their membership, and the number wise also, see what I understand is, see more or less NSE and BSc brokers would be same. See, I would the logic behind this would be because the investors who are basically trading, yes, if suppose I am trading on F&O, then definitely I will have NSE broker. But if I want to trade on the stocks which are penny stocks, or which are stocks which are listed on BSc, so BSc membership is mostly compulsory, because wherever I see everyone who is having an NSE membership, they are by default they are having the BSc membership. So because of this large stocks which are BSc is having for more than 5,000, 6,000 stocks listed, so people are having the membership. Now coming on your next question, BSc's growth, yes, definitely BSc's growth will be there, but still if you compare with the exchange NSE, see MSCI is still struggling. Okay, so the growth will come only from the volumes, and the volumes come on NSE only. So and futures volume, options volume, so BSc is still lagging on that. Yes, BSc is doing well at their mutual fund platform, which is BSc Star MF. They are now #1 in India, and NSE is lagging behind that. So one or out of the product, definitely they will be #1, #2 kind of a thing. But overall, if you see, I think this is my perspective. I may be wrong, but BSc has will have a very long way to catch up with NSE or nearby to NSE.
और विक्रम जी, ये इंटर एक्सचेंज डील भी होता होगा ना?
Sorry, inter exchange deal
means NSE member.
Yeah.
He is also not. He can also do in BSc and BSc to NSE and all like that. They do.
See, a member can have both the exchanges membership. Like
Membership,
if I am a broker, okay.
Yeah.
But inter exchange settlements are not happening. So I think they may think of this.
Yeah, because bank में देखो interoperability है.
Yeah.
All banks are connected, and you can, one bank customer can deal with another bank also.
Correct.
So इधर भी आ सकता है. That may be the future.
Yeah, that may be the future. And as you recently, the regulator is going towards the T+1 settlement, which has been now kept on hold. So those kind of things, even we can think of a situation where we are just buying the stock, and automatically the money will get wherever is the bank account, whether it is linked or not linked, and with a unique code, it will get debited and it will get settled directly. So
Yeah.
the broker's role of doing the settlement will definitely, it will get reduced.
You are right. That is a real, like, abhi customs may,
Yeah.
we are all interlinked.
Correct.
So same way this should happen here.
Correct.
Okay.
Now coming to the IPO of NSE. So NSE has basically in December 2016, they have filed for IPO earlier when Ajay Tyagi took as a SEBI chief. But at that time, they were looking at the valuation of 45,000 crore. And because of that co-location issue, that IPO was kept on hold. And currently, again, NSE is under pressure with the investors only to get it listed. And the recent valuations which are coming, it is coming somewhere around 2 lakh crore. So as we see that NSE has a monopoly over the equity futures and tradings and all that, the valuation which we have discussed, that the valuations which NSE is claiming as of now, and whether the profitability will be there next year. Yes, the volumes have gone up, but it will have an impact where they have sold a good amount of their investment in CAMS, and they also have plan for getting listed of this NSDL, then NCDX, which is their commodity exchange, which is also there now. They are planning to merge it into NSE. So that plan is also on hold. Apart from all these kind of things, there were some popular scams which are there happened in NSE also, and some allegations have been put. So MSCI, which is Metropolitan Stock Exchange, when it was earlier known as MCX SX, so they have a case of 856 crore against NSE, where so this was related to currency derivatives membership, which NSE has given at that time to increase the volume and all that. So they have filed the case with the Competition Commission of India, which at the lower court, they already won the case. MACI is already won this case, and now this is pending with the Supreme Court of India. Then the co-location scam, which we have discussed, and the recent one, which is with that drama is going on, means literally on one side, we are seeing that there are a lot of development, there are a lot of technologies involved, and we can't literally so this really where we have on one side, we have proud that we are the largest NSE's largest exchange in the world, and this kind of things where a CEO or MD who is basically running the exchange with somebody who is sitting in Himalaya and doing all these things. So literally that literally makes everyone down in the world, and a lot of media has coverage has been done on this. Although if you ask that whether the current price has been and how much will be the impact and all that, I think the market, the unlisted space market, they have already discounted this. So which we can see that 500 to 800 kind of rupees down, and some FI is selling NSE. So yes, on one side where we are saying that yes, we need a strong stock exchange with a highest integrity and highest transparency to be there. Vis-a-vis, we also need these kind of compliances and these kind of. So basically, the regulator should regulate the regulator. It's kind of a thing. So NSE is a self-regulated. NSE is regulating all the companies, all the members. Now it also. And the role of SEBI was also not that fair in this recent case, where it has been where they have not taken a proper action against either against NSE or against the people. We all know in India the things will go on, and it will not have yes, NSE will have someone else, and then someone else will manage NSE. But the thing is that yes, corporate governance needs to be the focus for the government also, who is appointing now the new MD. Yeah, guys, this is all from my side on NSE, where we have covered NSE's profitability, NSE's and how NSE is going on, and what are the issues and on these kind of things. So if you have any questions, happy to answer, or any views we can discuss.
Yeah, NSE का IPO is primarily for the current investors to go out from their investment, or is it in anywhere required for further enhancing their IT infrastructure or anything? How, whenever that issue comes, what may be the proportion in that?
See, if you say NSE is totally institutionalized, okay.
Yeah.
So mostly the IPO will be OFS only. And if they are doing the fresh issue will go into the company. So there is no promoters basically in NSE.
No, वही है, वो fresh issue for the
largely-
company
Yeah,
कितना होगा?
largely it will have no current numbers are not there. So, but I feel largely it will be more than 50% or maybe more than that will be a exit to the existing investors.
वही है.
Will do
So
that.
इसलिए the primarily it is for the exit for the
Yeah.
initial investor.
Correct.
In
And there
that
is
way,
one-
because if at all something they are also putting up robust IT infrastructure or integration with the international market, which they just now US का किया ऐसा, and international gift center में और भी ecosystem, all that, then their futuristic earning will go up. And that existing investors as well as the new investors will get the opportunity of enhanced what you call that income or valuation. So
Correct, correct.
वो important aspect वो आएगा whenever there are issues coming.
And the one more important thing here is that currently the trading happens in NSE stock. It takes literally 2 to 3 months time to get the transfers and all that. NSE controls that. So basically you have to do your profiling, and you have to take the NSE's fit and proper approval, and then the stocks are getting exchanged. So the current process is also taking time, and this is basically leading to the higher deals. So you cannot buy less than 1,000 shares or less than 5,000 shares in NSE, and if you want to buy a lesser quantity, then again in unlisted space you get a price like crazy prices also. I heard of people are buying NSE shares at 5,000 rupees also. So that's the case. But yes, definitely they will have exit. They have a lot of FIIs and a lot of their domestic institutions where they want an exit, and they want exchange to get listed. And also there is one more thing why the exchange also needs to be listed, because they will become more accountable. They will become more transparent, and they have to do a lot of disclosure, which currently NSE is not doing.
Correct.
All these scams, these are coming out of 3 years, 4 years, after 4 years, after 3 years. If you are an exchange, if you are a listed exchange, then definitely whatever decision you take, you have to report it to the listed exchange and the SEBI board.
So the SEBI control with the NSE was in relation to being an exchange, only exchange related, not related to any listed entity.
Yes, correct.
So that gap is there, no?
That gap is there, correct. So even if suppose if you are a listed entity, and if you want to make any decision to appoint anyone to give any contracts or anything, you have a highest disclosures, which you need to go to the exchanges. So currently exchange NSE is not listed, so NSE is not giving those this thing. That is why the person who is having 15 lakh of package has got around 5 crore package.
आपने वही बताया अभी
Nobody
वो
was answerable.
yeah, nomination remuneration committee is compulsory for listed companies. So either to hai, but it's not effective.
It's not effective. It's not.
हाँ,
Correct.
तो इसलिए ऐसा हो
This is
सकता है.
all. This is all. So listing of NSE will definitely will have a more
हाँ, तो ये
disclosure and more
overdue है.
transparent.
ये overdue है.
Yeah, it is already overdue.
Overdue.
I feel before LIC they should list NSE.
हाँ.
Is what I mean. Generally, we our broker lobby we think of this.
Because LIC also has got major share here.
Correct. More than 10%.
तो हाँ, तो उनको थोड़ा उधर उनका कंपनी लिस्ट करने से इधर लिस्ट किया तो और ये तो पैसा अच्छा मिलेगा ना इधर भी.
Correct. And there will be a lot of unlocking of the value. If NSE's share was freely tradable, would have been freely tradable in unlisted space, we would have seen a price of around 5,000, 7,000 levels. Because of the issue where the lot size are higher and it takes 2 months time to complete the formalities, the trades are not happening that way.
Yeah, that level it doesn't happen.
That trouble is there still.
Correct.
So
In fact, we have seen many banks, institutions, PSU banks, IFCI, IDBI, they have huge stakes in NSE. Many of them were promoters. And when the focus is on core business and this being a non-core assets, they have been selling. And in fact, they had to give advertisements or do some bidding like IFCI did. We remember IFCI sold shares at 800 rupees a few years back.
correct.
They needed money. If the listing was there, the price discovery will be far better. And they did not have resolved to such processes. Many promoters have stake and they want to focus on their core business, and huge wealth has been created by just holding NSE shares for long term. So one thing is, it's a blessing in disguise. It was not listed, maybe they would have sold out earlier, but now it is, as you said, it's a 1 rupee share, right?
It is a
And
face
you are
value one.
getting over 3,000 rupees. So huge value unlocking can happen, and there can be greater
Actually,
better price discovery. And also then that LODR comes into effect, appointment of directors is by shareholders. So there can be a better management and better independent directors who are appointed by the general body of shareholders. Now, there is a lot of interference from the bureaucracy, and sometimes even the top government cabinet ministers are not aware of what's happening on the ground. It took over 5 years, 6 years to discover. And now, incidentally, it's good the government is tightening their grip and would be having better boards, including more effective CEO.
और मनोज जी, वो what happened? No, banks, when they were in need of capital, the government ministry said that all that such shares where you are holding it, not necessarily being a banking organization, you are told to sell it. But if you look at ICICI Bank had made a lot of money by investing in various shares, and a various appropriate time that has resulted in a good valuation for the main company. So I think that was really premature in selling now. All of them who have sold, as you rightly said, it is at a peanut. Had they been waited for some more time, when the real IPO and all, then they would have got bigger value. So in that respect, that was a little earlier mentioning, no, you sell it. So some of them sold it.
Right. In fact, IFCI, there was a time the investment in NSE was more than the market cap of IFCI. Right?
Correct. I remember one instance which was there, I think, before COVID. So UCO Bank has given for this. They were also having some stake. United Insurance was having some stake in NSE, and so the bidding was going at. We also bidded at around 1,200 rupees, and at the last moment they withdrew that offer. So they didn't, and then the NSE price went to 1,800 to 2,000 rupees. So they just after that, United Insurance, which is so NSE price went to from 1200 to 2000 rupees. And after that, all these larger deals are happening. And then some AIFs, which has also put into money, like IIFL. So they have their AIF, which has put across, I think, large money in NSE through their fund. So that has also got an impacted on that.
In fact, any guesses when NSE gets listed, will it be a part of BSE Sensex? It cannot be a part of Nifty, but that will be quite interesting. In fact, this deep dive series on unlisted stocks, particularly high quality, profitable companies, there has been demand to cover it in detail. Indian, international companies. This is a part of a series on NSE, also a series on unlisted stocks. We'll be doing a deep dive into many unlisted stocks. There are hundreds of them. There are at least 20-25 which are on horizon, which are also for expected listings. And some of the large ones like NSE being among the largest in anticipation of listing. There is HDB Financial, a subsidiary of HDFC Bank and NBFC space. Those stocks also many are looking at. There are many others. There was a time all this policy bazaar, Paytm, there was an informal market, right? They got listed. They give some sense of price in indication, and also listing gives more transparency. The numbers are available for everybody. So we'll be doing it as a series very soon. HDB financials, and we'll also benchmark them along with other listed players.
Listed pairs, correct.
Like we did today, NSE, BSE, we also looked at some of the global exchanges. We will continue updating on NSE. NSE, interestingly, it happened at a time, it became a very main item in the media. The NSE order by our world-class regulator, SEBI. We did a deep dive into the 190-page order. Also looked at board issues, the earlier board, and their negligence. And what did they do? Their non-performance. And also, if they performed, how did they perform? And now, today we see NSE is a first-class institution, high quality institution, not only the platform. Of course, there were issues on the co-location case, insiders, some wrong people benefit, appropriate governance action will be taken by them, but a very profitable institution, very good numbers, very good profitability, and also which deserves a rich valuation. So we'll be covering many, yeah, Mr. Narendra.
No, Manoj, our government was moving, or the new age technologies are asking that we should be allowed to have our company listed only straight away in abroad. Whether that will come, I don't know. You said no, this NSE will have to be listed in BSE. That is maybe there, but now there is one move that some of the Indian companies, can they get listed in US or means international?
Sir,
It's
sir,
an
VDF is
important
already
point.
listed now.
The government has already been an enabler, because there were some companies which were looking at listing in NASDAQ, because NASDAQ gives much better valuation for new age companies. It would certainly happen. People who are talking about listing of companies like Bookman Show, etc.
Yes.
And also it should happen. Government has enabled, and government has also enabled listing of US stocks on Indian exchanges. And the Indian investor can buy Microsoft today.
Correct.
Indian investor can buy Amazon today.
Yes.
Indian investor can buy Tesla today. Hopefully tomorrow can buy Coca-Cola and Pepsi also. We will do a deep dive today.
Up to
great opportunity.
up to liberalize remittance exchange scheme है ना, उतना limit का तक ही है.
Yes,
Yes.
Naki hai. And not only that, we had advantage. You don't have to buy one share of the company. We can buy in terms of fractions, in terms of receipts, right? We are doing a deep dive presentation on what to do, how to do the easy way. And this is it's a fantastic dream come true for many investors. Only I think we'll have to see the volumes which are coming in that. Hopefully volumes are going up, but the platform has come and started. Are we ready with the presentation? Manish,
Yeah, we can discuss.
buy or sell the new age stocks and the old age stocks also. And how, at what price, how much investment, a deep dive. Let's make it as interactive as possible. This is a new opportunity. First time it has happened. You can go tomorrow to the intermediaries, which we will discuss, open the account, and it's possible to start investing since from Monday.
You can see the screen, right?
Yeah, do a full screen if you can.
Where to do this?
Press F5.
Press
F5.
F5.
F5. Yeah.
Done.
Yeah. Yeah.
Narendra ji, आप बोल रहे थे ना? I tell you, VDIF is already listed on Nasdaq. Long back. Can I am audible?
Yeah. You are audible, Manish.
Actually, I have just just cut paste or just compile the data in 5-6 sheets for discussion. Actually, I have used Money Control and Economic Times, both the websites, to understand the process how to buy a US stocks on NSE platform. So today's topic: buying of stock from NSE platform. This is our team member details who who does the administration of our all YouTube, all our Zoom meeting data. This is our standard disclaimer. We are doing only for the educational purposes, and we are not providing any advice or any consultation fees or anything. Just to start, sir, NSE IFC, it's a subsidiary company of National Stock Exchange that operates in Gujarat. International Finance Tech City GIFT will make it easier for investors to buy and sell US shares from Thursday, March 3rd onwards. So it is already started before 2 days. NSE IFC is a fully owned subsidiary of National Stock Exchange of India and has received approval from the market regulator to establish an international exchange in GIFT City. From SEBI, the platform provides an additional investment opportunities for Indians to invest in US stocks at a low cost. To begin with, stocks of 8 US entities will be traded on the exchange: Alphabet, that is Google, Amazon, Tesla, Netflix, Apple, Walmart, and Microsoft. Initial market participants will be able to trade in these 8 stocks. And in phased manner, another 50 stocks will be traded on NSE IFFC platform. So let us know. This is the process. Retail investor will not be buy the stocks directly, as if what we are buying from NSE, BSE, we cannot directly buy the company stocks directly. The stocks will be in the form of unsponsored depository receipts, wherein the market makers will buy shares in the US and will issue their receipts. So somebody is buying the shares on behalf of us and then issue some kind of receipts or some kind of papers in the demat form to us, as if we are the holder of the shares. So process is that like market makers will buy shares in the US and issue receipts against them, which will be known as NSE IFSC receipts. They will be equivalent to owning a stake in a company whose receipts they will be. Retail investors can buy or sell these receipts just as you would buy or sell shares of the companies. So virtually there is no difference between the direct buying of stocks vis-a-vis buying a NSE IFC receipts. The number of tradable stocks will be increased in a phased manner. Ultimately, the stock exchange is a target of 50 largest US entity on the stock exchange. What are the steps actually? To start trading on NSE IFSC, investors will have to open a trading and demat account with NSE IFSC registered broker. There are 36 such brokers now and include most of the large broking houses in India. Investors will then have a transfer funds from the local bank account to the broker's account. Once the funds gets reflected in the broker's account, investors will be able to trade in the US stocks. So it is a similar in India. If you want to buy a stock from BSE, you have to transfer the funds to the broker and then only broker buy as per limit. Correct. For trading in the stocks, retail investors can transact on the IFFC platform under the liberalized remittances scheme LRS limits prescribed by the Reserve Bank of India, that is RBI. This currently stands at $250,000 for each financial years. So roughly we have approximately above 2 crores investment can be made during the year. Approximately, it is more than that. Ownership. So who will own the shares basically? The shares will be owned by the NSE, but the NSE IFC receipts will grant ownership of stakes in the company. That is, the number of receipts for a particular entity will be equivalent to owning a proportional stake in the company. NSE had further specified that NSE IFFC will release the receipts of all the approved companies in a certain ratio. For example, 1 share of Tesla will be equivalent to 100 NSE IFSC receipts, and 1 share of Alphabet and Amazon will be equivalent to 200 NSE IFFC receipts each. The ratio specified for Microsoft, Netflix, and Meta platforms is 1 share each of these companies equivalent to 50 NSE IFFC receipts. The ratio of Apple and Walmart is decided as 1 share to be equivalent of 25 such receipts. Oh, I actually, very important slides I forgot. Like there is an example that if you buy Tesla shares today, 1 receipt will be approximately of 0.01 cents actually. So I missed that important slides, how they convert this. But if anybody has any, kind of remarks on this. Hello?
Yeah, Manish.
Yes, sir. Any comments on this?
The comments, no comments, but clarity.
Can you put your video on, please?
सर थोड़ा क्लैरिटी नहीं है, मैं भी जानता हूँ.
थोड़ा clarity नहीं है. Clarity in respect of the funds to be transferred. See, once somebody opens an account, with the broker, then
Yeah.
he has to transfer rupees or he has to transfer equivalent
No.
dollars.
He has to transfer rupees, sir, definitely.
Sorry.
He has to transfer rupees, not dollars.
Okay, so when the transaction takes place, then equivalent dollars will be debited.
Yes.
Okay.
It's like that, like when you transfer money to somebody in US, example, so you tell bank that you transfer $200 and debit equivalent amount in our account. So such kind of transactions will happen when dollar will be converted on that particular date. And that way, I think about 250,000 limit will also be, they will vouch that limit.
Right.
Only thing is the timings are, this stock exchange timing is evening 8:30 to midnight 2:30. So that will be somebody. So एक जी बिजनेस और CNBC आवाज में शायद एक और सेशन चालू हो जाएगा इसका रात का. Correct. And India is a penetrative market. Any product can be easily penetrative in Indian market. So I believe this will be a very big success. 2 days back, I was listening to the Z Business where they were, discussing the brokerage about this transactions. They were saying that it is around 2.5% maximum brokerage can be levied by your broker. So definitely it would not be 2.5%, but roughly brokerage is around 1%. Plus another expenses of 0.5% of all the kinds of expenses. So like both the sides brokerage would be and expenses would be around 3% according to my guess.
Those are just regulatory limits. Actually, they are just 5 paisa and 10 paisa. Today, any investor can invest in US stocks directly through Indian brokers like ICICI Direct.com and Kotak. One can invest directly. They have joint ventures with American brokers. They can do it. In fact, in any stock, they can do it. Any stock. And brokers are very competitive. That's a few basis points. Now, this provides a platform on NSE. It's an NSE platform. And
that's what I was telling Manoj ji.
Yeah, Mr. Narendra. Yeah.
No, that all the our individuals through a bank, they can request them to open a correspondent bank account in abroad and make available that bank account facility to our customer, and there through the correspondent bank or through the broker, they can purchase this all this US stock, and it can be traded also there. So that facility is already there. As you rightly said, NSE has taken the advantage and they have come with their platform.
Right, and made a very simple process for the 50 stocks, which has been announced, and initially to seed and experience in 8 stocks. But what needs to be seen is the volume on this platform, the transaction cost, the difference between the buy and the sell quote on the system.
And unless the volume builds up, it will be at a disadvantage for individual investors, because here all those NSE brokers, if a pool of that such individual investors gets them in such trading or purchase and sell and all, then they are able to have the power of money. But otherwise,
sorry, carry on, sir.
नहीं, हम बात करिए that एक ही छोटा वॉल्यूम में ये इतना बड़ा एक्टिव नहीं हो सकता, इसको बड़ा वॉल्यूम जरूरी है. इसके वाला के लिए quite a lot of people, high net worth individual will have to opt, and they have to utilize that these brokers through the NSE. Then they will have a really power of money. Otherwise है ना, ये छोटा और इतना बोली सर्विस चार्ज निकल जाएगा.
Mr. Narendra, see, basically, I think see this also gives an opportunity to lot of big HNIs, UHNIs and domestic institutions where they can do some arbitrage also. See, can you remember the situation where BSE was the leader and NSE came in? So the market makers were generally the initial market makers generally are the institutions only, because they find the arbitrage opportunity. And arbitrage kills your this pricing and all that, and that automatically that creates the volume. So if you compare this US denominated price and with the actual US price with the NASDAQ, and if suppose some large institutions are having both access to NSE, IFFC also, and to that NASDAQ also, if they are finding any arbitrage in dollar to dollar terms, definitely the volumes are going to. But as you rightly said, but as you rightly said, for retail participation, definitely the volumes are needed. And NSE, as they have done for the cash market and future market in 2000 onwards, they will definitely do it here also. Now the only thing here is the execution. How the simple execution they can do, like normal investor who can understand the open account with Zerodha stocks or like these discount brokerages or anyone, they can just open an account and then do the trade. How simple this process will be, that will also have a good trigger point for the volumes.
Thank you.
And Manish, can you share the 36 names which you mentioned?
Actually, I have to go to, I can do that, no problem.
I think there are some 10 names which are there started with.
There are 8 stocks and 36 intermediaries.
HDFC
Of
has
course,
a big
they
group,
will be-
HDFC Bank.
Let's go one by one.
I think this website is not working. I have that list in my another laptop.
Manish, I have just got that list. If you want, I can just.
Yeah. You can share it.
You can share it, sir.
There are 36 names. Let's have all of them. And some of them are high volume intermediaries. And high volume intermediaries offer very competitive rates.
These
Can we go one by one? Vikram, can you read them?
Yeah, I can read that. So it's basically Anand Rathi,
Yes.
Arihant Capital, Daga Business, Divya Portfolio, Dolat Capital, Edelweiss, MK Global, then there is ST, then there is Evermore, Excel Broking, FinDoc, Globe Capital. Then there is, of course, as we guessed, SDFC Bank, Indothai, GRD Securities, Goldmine Securities, Mansukh Broking, Marwadi International Securities, Motilal Oswal, Open Futures and Options Commodities IFFC Private Limited. Then few other names are Philip Ventures, Pace Financial. Then there is RSL, Share India Securities, SHG, SMC Global, Star Finvest, Stock Holding Corporation, Synergy Deal. Surprised to see there is no zero, there is no ICICI. ICICI is
ये
also
30
not there.
brokers है, 30 brokers है.
And it's a mix of PSU and private sector and small and large brokerages. Maybe they had a membership already of the exchanges and they had the infrastructure ready. And hopefully many more should join. Looking at the volumes, they need to see possibly the volumes, and it is possible their clients will also ask for that trading facility. But one interesting thing to notice, you did not need $100,000 or $10,000 to start. you can start with less than a lakh of rupees and start with maybe two stocks. And we have seen international exchanges like London, Luxembourg, they have those GDRs listed when Indian companies were raising money from offshore market to get a foreign exchange. Liquidity in Belgium stock exchanges, etc., were also very low. GDRs were
So,
very thinly
so
traded, and they
Manojji,
had higher thresholds. Now this is a very low threshold. Even I think 50,000 rupees worth of stocks we can buy. Yeah, Mr. Narendra, you were saying something.
no, whether cryptocurrency में अभी लोग invest करता है, maybe under that scheme only, maybe, but unauthorized. Can that money get shifted to this stock through this?
That's very interesting. Yes, they have an
Yes.
option. So why not look at Amazon and Teslas?
Yes.
So youngsters may be attracted to this, but the main thing is a return. Crypto, they saw huge returns, and of course huge losses also suddenly in the last few months. But if they get attracted by this type of participation at very competitive rates and low transaction cost, the difference between a bid and asking price. Vikram, you are aware of what are the type of volumes which happened yesterday?
Manoj, I haven't looked at to that. But,
No, I tried to
we can-
find out from the website, but कोई data नहीं है, Manoj bhai.
So data needs to be available. This platform should have a separate website, and they should give stock-wise data.
They are having the separate website from NSE. You can just go to this NSEIFFC.com. And
But unless it is operational and gives appropriate insights,
correct,
there is no use of such website. And it is really unfortunate NSE at this stage, when everybody is looking at NSE under deep scrutiny. And then when they launch, they should back it up with appropriate systems.
correct.
So we know the transaction cost and what are the type of volumes, what are the spreads.
Correct.
Possibly.
These are the some data which is there.
Okay, some data is available. Oh, fantastic. This is on which website?
This is on NSE.
NSE.
देखो, even company wise है, देखो.
Yeah,
Apple,
company wise they have given the
Microsoft.
last traded price and all.
Right. But does it get a volume?
Volumes are there in 1,000, I think in USD, $100,000, 100,000 volume is there in Apple. So
That's very
then-
interesting. So it has taken off successfully, we can say, right?
Yeah.
We are
On the
doing a
first
deep
day.
dive directly into the NSE.
Volume
website.
also there. Volume is there.
Yeah.
So they need to increase the timing of the platform.
Correct.
Or maybe overseas Indians who are traveling or who can't sleep. So looking at international market, they will look at it. So in fact, this is a great thing we are doing for NSE's platform to create awareness.
Yeah, but
About
Manoj,
the platform and opportunity, and who will benefit. NSE will benefit, and the companies listed will benefit by getting well-known on Indian stock exchanges. Yeah, Mr. Dushyant, you were saying something.
yeah. I was just looking at this chart, and I think some disturbance is coming. Somebody is constantly.
पता नहीं चल रहा है सब कौन है. Okay.
Yeah,
Yeah.
Dushyant, and then Mr. Krishnan Iyer, some views from you.
Yeah, I was just looking at this NSE, this yesterday's detail for the trading in IFSC, NSE IFSC. The volumes are, it's a good point, and it's very encouraging that now the facility is available in India. But volumes, if you look at it, they are about not even $5,000. They are in $1,000, $1,000 for Apple, and Microsoft is 0.95, Amazon is 1.25. So all in all, it is about $4,000 to $5,000. So it's a very, very meager amount. Hopefully, it will develop, it will increase.
दुष्यंत जी ऐसे ही स्टार्ट होता है ना, पहले तो लोग पसंद करना पड़ेगा.
Dushyant ji, as we discussed, people will find an arbitrage opportunity here. Some institutions only will have to create a volume here. And NSE will definitely do that. NSE has a good backing of large institutions like LIC and all that. And definitely they will do that. Here there is one more this thing, as we mentioned, is that people should be aware of this LRS also. So LRS compliances are all there. So if those are also getting simpler and all that, so it will definitely attract more investors and do that.
Yeah, and second thing is, this NSE will give the details of the volume, script wise and all that. But ultimately, the transaction cost also needs to be reasonable.
Correct.
Yeah, so that also somewhere we need to know how it is, how much it is.
Ultimately, investor gets opportunity to go to a Indian broker with a joint venture partner with a US broker and compare the prices, which is better. But only one different thing is there are different time zones.
Correct.
At the same time, you should be able to get both the comparable prices and buy where it is cheaper. You get a better price and sell again where you get a better price. At the same time, that information should be available. But this is a very interesting. It's a trend towards greater, better price discovery and transparency and opportunities available. And one thing is a selection of this 8 stocks and 50 stocks which are proposed. There is a mix of yield stocks. There's a mixture of value stocks and growth stocks. Companies like Microsoft have got very good dividend yield. They keep coming out with regular buybacks because they got very high level of cash in the balance sheet. So when the price goes down, they commit a buyback. Tesla is known as a growth stock. Walmart is a kind of a value stock. Meta is a growth stock. When Meta, Facebook came with a listing, people said very highly priced. It corrected the next day, and after that, it has multiplied significantly. So you won't get some opportunities. Yeah, Mr. Krishnan, would you like to
thanks,
trade in
Manish sir, for
US
insights. One
stocks?
small question, sir. What is the timing for the exchange, sir?
8:30 evening to 2:30 a.m. and in the night.
Okay.
Sir, not suitable for us, but I personally feel we can go for investments, not for trading. And volume would not be there for some days because what I understand that a broker has to shift his office. Like he has to open a new company in the gift city to get a brokerage license first. They have to get a lease or buy a property in that gift city. Then only they can start. If you see that these offices are all the offices of the 36 brokers are in one building actually. So I think as and when number of brokers will go up, volume will also go up, and otherwise for some, like today we came to all know people amongst our group. What are the benefits? What are the of this whole investment idea? If you see every same city, everybody is in signature building. So that is the benefit. I think in 1 or 2 months, this will definitely volume will be picked up because all brokers, they have to turn profitable. They need a more clients to pitch in. Correct.
Sir, just एक out of curiosity question है, ये signature third floor building कौन सा real estate company का है? Maybe they get good
Sir,
rental
मेरे
income.
हिसाब से ये ना Brigade Enterprise का है, if I'm not wrong.
Okay.
No, let's not get into that. These are available at very low cost. These are available at low cost and there are no vested interest. This gift city is being promoted for a long time. BSE has a stake, NSE has a stake. NSE has started this platform very soon. BSE will also start. They have
BSE is already there,
they
sir.
have interest, and it is not a builder is selling and you have to buy from the builder. No, these offices are available at very, very low cost, and also it is essential from regulation point of view and accountability. When you open account with intermediary, there should be some physical place at which one can send a correspondence or interact. And somebody, a representative of the intermediary should be present, so that physical places available far better than way companies in Mauritius and Cyprus and other places.
Manojji,
So
other
this shows, yeah.
business also gets these brokers now. There will be what you call gold exchange also is going to be there. There will be some international derivatives also like that. That in the gift city में बहुत सारा मौका भी start हो गया.
Sir,
Right.
actually, this broker has to form a new organization to work in a gift city. They cannot mix the business of normal brokerages of BSE, NSE along with the gift city. They have to register in the gift city. They have to have buy or lease office in the gift city. Then only they can act as this platform.
वही मनीष जी बोला.
और सर इतना जैसा मनोज भाई आप जितना बोलते हो ना इतना सस्ता नहीं है. गिफ्ट सिटी इज नाउ वेरी एक्सपेंसिव.
गोल्ड एक्सचेंज भी है ना.
हाँ, गोल्ड एक्सचेंज
आने वाला है
सर, वो भी आने वाला है. और आपको मैं बोलता हूँ सर, दिस ऑल ब्रोकर्स विल टेक एटलीस्ट 1 year to break even.
Yeah.
In addition to Manish, basically, see, the whole setup is different. The exchange
Yes.
has its own another exchange, which is a subsidiary. The regulator
Yes.
is apart from SEBI, there is another regulator also. The foreign regulator is
Yes.
also there. Okay.
Yes.
Now this has been put into a gift city, which is a SEZ, is a special economic zone. So
correct.
And the currency is also totally different. So it is like that. You are doing dealings sitting physically in India, but all dealings
Yes.
are basically happening outside.
Correct. Exactly.
It's just kind of that kind of a flavor. If you remember clearly, earlier FMC was there, Forward Market Commission, to regulate these commodities brokers, and then later on it has got merged into SEBI. So that
Yes.
time, if the broker wanted to do commodity trading, so they has to set up another company. They had to take the approval licenses from FMC rather than SEBI. So,
Yes.
so the same structure is still here. So they
Sir,
have
because
two
of
regulators.
because of tax benefit, na, in this gift city, all these brokers may not have to pay income tax if they generate a profit.
Correct.
This is the reason behind it.
Anyway, they are not going to make tax as
See,
income
they don't.
only.
They are not.
Once again,
They may not
let
be
us
all.
clarify. The brokers have to pay a tax on the profits. That is not the issue. But what the government wanted when it came into gift city, they were seeing there was lots of evasion and non-compliance related to offshore treaties where earlier they were signed, Mauritius and Cyprus and other things. So, and why people have to go there? Why can't India offer alternative? And this is likely it will happen in Maharashtra also. But the Gujarat government took a step forward immediately with the support of the Prime Minister and ensured things happen. And we mentioned about brokerages. Many brokers took small offices in the gift city around 5 years back. They set up infrastructure, but they saw it was not happening. But they took because they were requested by the gift city who did aggressive business development. And then some of them unwound their business and reduced. But this as of now, 36 are there. Very soon it will become 100. Correct. And it will become 200. But we have to see for the time when there are people, fund managers who are based in Singapore, and there are many investing through Mauritius route. If they use big gift city, then it will be a big opportunity for India going global as far as exchanges are concerned. And we remember when the NSE was formed, volumes were low. Today it became one of the most successful, biggest platform. So this is, we can say it's a startup which has arrived. Volumes are happening. Technology platforms are available. And there is transparency. One knows the volumes. And there is no way for the volumes except to go up. We will continue doing reviews continuously, and ultimately more stocks have to get listed. You can't go to one exchange for one stock and another exchange for another stock. So when all the 50 stocks are listed, That will be a trial. Ultimately, you have to have 1,000 stock plus listed to have significant volumes, because a buyer needs a choice, right? Unless he becomes a jobber or a dealer in Amazon or Meta or Microsoft. So you need to have a diversified basket of 50 stocks.
Correct.
And a good
And ease of
profitable
process
high-end
to
companies,
purchase.
right?
Correct. And ease of process to purchase for all the retail and everyone. Like on a
Right.
click of button, they can transfer the funds to their another broker or bank in USD, and then immediately they can go. If suppose currently, if suppose generally if we want to buy any US stocks, or so we should have a US entity, and then I transfer the funds. So transfer of funds only takes 1 day, okay, through SWIFT and all that. So if it is happening within India, the fast, and if suppose I have a money at around suppose 8:30 it is starting. So if suppose morning I am sending money, so evening I should buy the stock. So that kind of a process they have to basically do this.
But there
Right.
will be
The process
there-
is most important.
Vikramji, there will be definitely what you call currency conversion rate, no?
Correct. And that will have impact of this.
Yeah, that will also have impact. आज का conversion करके हमने किया, suppose हमारा rupee versus dollar कोई variation आगे होता है, automatically apart from that, no, if you are looking at again conversion back, you will have that risk.
Correct.
But I guess those who will be dealing here, they won't be doing back to rupee for a long time, because they will have a committed funds. And once they convert it dollars, they will keep it in dollars, because they will build up the portfolio there.
Right. That's important.
Portfolio within that amount permitted only.
Yeah. But my point is that how it compares with the present system of investing, that you transfer dollars through this RBI, this 2.5 lakh, you transfer to some broker outside India and then transact. So how does it compare with that channel?
There, no, it is going to be at the hands of that broker. So he will be managing and all. Here, maybe through the exchange, you can have a very transparency, and you will able to have the information, MIS better. It may be that.
But Narendra ji, even Indian brokers like ICICI Bank and all, suppose you have an account there, through them also you can invest directly in US.
I know.
They do.
That is all. That's why I mentioned already that channel is already there.
Yeah. So between these three options, like one is a channel through your Indian brokers outside IFSC. Next channel now this opened is in Indian broker or whatever broker in IFSC. And third is your remittance outside India and investing directly.
Yes. All are there.
Yeah. So which one will settle down? I mean, because a lot of people are doing through brokers otherwise, not from IFSC, but through otherwise. A lot of people are doing because it's IFL and ICICI and all these people are doing. And I think that is working pretty much well.
And, banks have also opened branches in Gift City. And they can also raise money directly from their abroad under their borrowing requirement. And they can also have foreign currency deposits also. So it will be equivalent to a deemed overseas branch, which has a lot of benefits. So they can also get this account directly from you there, and they can do the dealings also.
Another point which is coming, today we had 36 brokers. There are many brokers who have visited Wall Street. They had thought about opening offices in New York and London. And then they say the cost of setting up an office in New York and London is very, very high. So when you look at, so that to have effective ability to service the stakeholders, now it is coming at a very, very attractive opportunity, so that their cost will come down. So more Indian brokers will come. And when we talked about ICICI and Kotak's offering a platform through their technology platform, now they had JV partners. They could not do it on their own. They did JV partners. Here they are able to do on their own. So there are many Indian firms, brokerages, which will become larger and not only attract Indian stakeholders, but even NRIs from abroad, and at some particular time, even foreign citizens when the regulations allow. So opportunity to have a platform and ability to serve to the Indian brokerages and intermediary is a very significant step taken by the government. And it
Is
starts
there a-
with GIFT City. Ultimately, anybody can offer the platform in any SEZ with the approval of the government. So
Yeah.
more competition will bring more opportunities and lower transaction cost. Ultimately, the market will decide who gets a more volume. Whoever gets a more volume at a lower transaction cost is more effective. Another thing is to see who is the regulator, what is the excess in case any problem happens. Today, if you have a dispute with a broker in USA, what is the remedy? Can you complain to SEC? And then you need a foreign lawyer. And today, if it is GIFT City, then accountability is different. Whom can you complain? You have better redressal mechanism. So many things are to be looked at. So more choice to the customer and the stakeholder. That's actually the name of the markets. When you have more choice, so more competition, more customers get serviced. Ultimately, experience will tell the story. We'll have more and more people sharing experiences when they do transactions.
What is the
Interesting.
government plan for having say another exchange in Mumbai?
Well, the government is allowing anybody to set up a account and set up an infrastructure. So
No,
it has
no, no,
started
no,
with
no. So
GIFT.
my
There are
no, no.
other governments also who are keen on doing it, but they are watching to because infrastructure setting up takes time. But hopefully support will come to multiple states. But let's see the experience of how it is. NSE has started. We will look at the time when BSE starts.
I hope that someone starts in Bombay.
BSE, they have a GIFT City plan. If they start, then apparently then many other things
Because
can
Bombay,
happen. But it's
Bombay has a a big ecosystem, supporting these foreign exchange transactions and the share market and all, better more than GIFT. Now GIFT they are promoting, GIFT they are persuading, GIFT they are pressurizing people to go there. So all these things will not be required to do when they open in Bombay.
let's hope for the best. More resources available, more options available. And if you can do directly in Dow, if Dow also sees our ticket size and reduces the ticket size, it will be even better. I mean, we are talking about the companies listed abroad. Anybody else would like to share any thoughts? Put the video on. Very interesting discussions on the latest things happening.
No, actually, we were discussing some time back is that apart from listing US stocks in India, I think we should we should increase the timing of at least indices where the issue generally comes in, where Nifty is from 9 to 330 and then ACS Nifty is all the way available to trade. So that is one there. And then also there were talks going between broker lobbies and all that, whether we can we can trade Dow futures here. So something like that. Those are, I think, providing indices trading will be a much better option than providing a stock trading.
That will be interesting. Besides 50 stocks, if we have Dow and Nasdaq and SGX Nifty also traded here, not SGX, that you can name it as whatever name,
Or you can just increase
GIFT
the
GCX,
timing for the
GCX Nifty. Possibly a GCX Nifty can replace SGX Nifty where a lot of manipulations are happening. So if Dow and Nasdaq and GCX Nifty comes here, and then one can trade in dollars, that will be really, that means we can say that exchange has arrived in terms of various products. And also derivative options should also come there. So one can transact in US dollars and derivatives. That could be a big multiplier.
Listing of indices will give more volume than listing of stocks.
Certainly, and indices, people will demand for derivative products. Also futures and options. So that could be a multiplier to the valuation of NSE, right? So we are coming back to NSE. This is a part of NSE. It can provide a
Manoj, your mic is off.
exchange and mid-exchange exchange. So wonderful opportunities. So great insights from all the participants. Dinesh, you are here with us? If all issues are addressed, can we, thanks to all the participants, we can end the meeting. Next week, we have a more sectors, companies, and look forward to the LIC IPO soon. Any thoughts on LIC? Vikram, what are your thoughts?
I think LIC is, so the logical thought is that a lot of amount will get out of the market and it will go in the pockets of the government. So definitely LIC will have an impact, and everyone, I am talking to a lot of people, they are just now into that, my policy is there, I will get discount, all those kind of things. So I think it will have, definitely it will have an oversubscription. And even if suppose there is a one time, two times oversubscription, it will have 1.4 lakh crore or close to that, it will get wiped out for some time. So LIC IPO is literally a biggest kind of a trigger for market. Could be a biggest trigger which we have seen the history of all IPOs like Rail Power, DLF, recently Paytm and all that.
So when do you expect the LIC IPO to come to the markets?
2 days back, I think they were just discussing Ministry of Finance that they may consider to delay the IPO because of the global geopolitical situations are going on. So I think they will basically, they may delay this, but the final decision has not yet been made.
They have also appointed new CFO from Reliance Nippo Life Insurance Wala. I forgot his name. He has been appointed as a new CFO for LIC.
Okay.
Correct.
It's interesting. LIC is offering a package of 2.5 to 3 crores to a CFO.
Yes.
Much higher than the chairman and executive directors
The
of
most
LIC.
the most important thing on this LIC IPO, I think, post listing of this, suppose the IPO is listed at around whatever 2,000, 3,000 rupees, but will the LIC will maintain to grow at the stage which is going on. So if you see the growth numbers and all for recent 2-3 years, it has declined. So where LIC was sharing, enjoying 100% market share, now it has just came down to 65%. And even if you see last 3-4 years, so it is going down. And the new age companies like HDFC Life, ICICI Life, these are doing quite well. So apart from just getting listed, how LIC can perform, that is most important, and that will definitely will have a price action into that. And even if suppose LIC is listing at around 2,000 to 2,500 in near future, there could be a selling pressure into LIC's stock.
Well, selling pressure can come only from the holders of the stock. And today we have seen last week some brokerages, top-notch brokerages started coming out with reports already, even before the roadshows are complete. They are talking about pricing between 2,100 based on valuations to 2,375. And this was before the recruitment of a CEO from a top-class private sector company. This is one more signal LIC Corporation is sending to the market that it is ready for top-class talent. And this is not a one-off. Hopefully, we'll be having hundreds of top management team. The new CFO should certainly recruit more people in the F&A team.
Definitely, and LIC should have a highest corporate governance also, as because larger part of India's wealth is being managed by LIC. So that should be the focus of government. And as it get listed, it will definitely come under scanner.
And listing with regular disclosures should increase the transparency, and ultimately the world gets the opportunity to invest in a top class Indian insurance players, today Chinese insurance players are listed, they are getting very good valuation. So if they can get, and India has a much better record of transparency and opportunity under penetrated market. Huge
But I
opportunity.
wonder,
Insurance, there
I
is a lot
wonder-
of under penetration.
yeah, I wonder why they would not have thought of a GDR issue.
Well, GDR issue
Sir,
will be the
सर
listing.
जीडीआर इशू करने के लिए बहुत सारा प्रेजेंटेशन करना पड़ेगा, डेटा देना पड़ेगा. एलआईसी के पास डेटा कहाँ है सर? आपको वो जो मेन आइटम है वही नहीं दे रहे, न्यू बिजनेस पॉलिसी का डेटा. एंड इवन इफ यू सी सर दिशन भाई, अश्वित दामोदर का आज का इंटरव्यू है इकोनॉमिक टाइम्स में.
Okay.
He is very negative about LIC actually.
Mhm.
He has given a two good examples that typical insurance company working on two fronts. First is how much premium they are getting from the policy holders, and second thing, the money deployed on the investment front, how much return they get. So as like Vikram says, market has become more competitive, and LIC share is going of the market share is going down year by year. They have this task of getting more premiums and task of getting more returns from their investment. There is this two area they have to work on it.
Yeah, there are big challenges.
Big challenges, yes.
Yeah, but
And
then one
market
more,
share is
one
a
more.
question of realignment. When a single player industry becomes multiple player, it shows the government wants to encourage more players in the market, give more options. Now,
Yes.
and also the customer gets a choice. But we
Yeah,
have
but that
Chinese
is-
insurance companies, American insurance companies getting business. So it is high time a top world-class player gets his share of pie. Whether when it is listing, we don't need the money from foreign exchange. So there is no need for a GDR listing because that point was raised. But FDI limit has been raised. So there can be much greater FDI. And so interesting times. Dinesh, you are here. Some thoughts on LIC?
LIC basically huge, it's like an elephant, basically, and it will be like that ship, sailing very high and very big. So let's wait and watch, but we will be putting in some minimum applications in 2025 accounts that we have got of LIC.
Oh, wonderful. Great.
Not only that, Manoj, I wanted to just bring something more to your notice, that nowadays companies have started taking analysts for plant visits. And one of the plant visits is being arranged on 11th March, 11th March Friday by Sansera. And you have to go to Bangalore on your own, and then they arrange for two plant visits. One is the normal plant and one is the aerospace plant which they put up. Now, why can't we also try and do such plant visits for our members? As that was one point which came to my mind. So that all of us can go for a plant visit. If you can, we can do something of that sort.
You can do in your individual capacity. And talking about LIC, we would mention last week, Bombay Stock Exchange in the convention hall had a physical meeting regarding LIC IPO.
Right.
And there was a full house.
Yeah.
And then when people asked, there was no management person from LIC present. Even then there was a full house.
Yeah.
BSC officials were present and the awareness drive has started. In physical meets have started. So that's quite interesting thing. I believe there will be many more physical meets. Government is serious, and getting a CFO without advertising and saying the process take 3 months and 6 months.
Yeah.
This shows the government is serious about it.
Yeah.
Giving him the remuneration he wants. And we wonder why a person with experience in Nippon Reliance would join LIC. A public sector, people join at an early stage. They learn in a different culture. That means that there will be a mix of cultures, and government is trying to be a go-getter, and India moves ahead. than other countries in giving opportunities.
Right.
Visits will happen, even physical meets will happen. Physical conferences will also happen appropriately and appropriate time.
No, my suggestion was
That's okay. We can always do offline. Let's talk respectively only on the topics for the day.
for think tank
And,
members can go for a plant
And you
visit.
mentioned about LIC discounts. You would be applying in multiple accounts using.
No,
a
you cannot
discount.
apply.
Quite
You
interesting.
cannot apply. You can one PAN number, one application.
But sir, I have got 18 policies, different
Uh,
policies.
So what?
No,
If
but,
you have
but
a-
still you cannot apply.
You cannot apply, sir. You can have one
One
PAN,
policy
one
number you
application.
can use for getting the discount.
Correct. Only you can apply in two categories. One is policy holder category and another general category.
But even in that, I think Manish, the PAN number will get match and they will
No.
basically.
That they
no.
allow, sir. That they allow.
Okay.
Yeah, there
okay.
are two separate categories, so they allow.
So basically, I can apply 4 lakh rupees. As a
You can
retail
apply
investor.
4 lakh rupees. Yes.
So different demat account or same demat account?
Same demat account will do.
Yeah, could be same. I have applied in number of issues where it was a shareholder quota as well as a retail quota. Yeah, so you can apply the same demat account because the categories are different and you are allowed officially.
Okay.
Manish bhai, if I
That's great. Generally, we don't do this IPO thing. Quite involved in pre-IPO.
No, it's an experience, Vikramji.
But don't be surprised if the LIC agents start talking to all the policy holders.
No, they are doing that.
Write their contacts and make them apply.
Correct.
Not
Correct.
only
They
in
are
the
doing
policy
that.
holders quota, but also in the public quota.
See, actually, LIC IPO will help in many fronts, basically. Number one, see, we will become a shareholder of biggest company in India, number one.
Correct.
Number two, because of LIC, so many new demat accounts will open, which will ultimately help in, development of stock exchange and money market only. So it's really worth that LIC is coming with IPO. It's a really very big step.
There
And
is
at
one
the
more thing,
appropriate time,
Manish.
Nifty and Sensex
LIC will get
composition will also
responsible for
change
the
by including LIC. Nifty and
disclosure
BSE
also will be there.
composition also will
Highest
change
disclosures
Sensex.
will be there.
Disclosures
So that
will be
a
there.
quite interesting service economy, service company getting a greater share and a growing company, profitable company.
Only I think that there will be a problem. That will be like opposition will take a very big note that how can you appoint a CFO from private sector? That will happen in the
It has
Lok
already
Sabha,
happened.
Rajya
So
Sabha.
whatever you do, the opposition definitely they will have a. Even if they appoint a Rahul Gandhi also, so they will have.
Let's not
kind of a
discuss about that. Let's stay away from such comments.
Yeah.
Let's
No,
stay away
we are
from
not-
such comments. These are not
Yeah,
allowed.
agreed. But agreed, definitely. But it's a big step. We like there will be a good governance. There will be a good disclosures where if LIC comes with the IPO, definitely.
Correct.
only ratios improve, claim ratios improve. Efficiency.
Yes.
And sir, Manish bhai, I would like to have your email address if you can
No,
send me.
let's not discuss this here. This is an open platform. No addresses and phone numbers are shared here. One second, please connect on the LinkedIn and Facebook. No data is given on the public on this platform.
Last time Manish told
Thank
that.
you so much. Let's great insights. Manish?
Yes, sir.
Yeah, I think the time is over. We have a
Yes.
fantastic discussion for last 3 hours. A deep dive on the global markets, the changing situation on the geopolitical and inflation, crude, opportunities available, deep dive on NSE, deep dive on opportunities on international company. Would like you to give a vote of formal vote of thanks to all the participants.
Yeah. Today's session
Thank you,
was good
everybody.
actually. And we had Mr. Raichura on the platform. He has given a very good lecture today. Rather, it's not a lecture. He has shared a very good information about what is happening in the world, what will happen on our Indian market due to the geopolitical conditions. And thanks, Vikram. You have also given a very good, insight about the National Stock Exchange. And we hope that this NSE also get listed very fast. So we will also become a shareholder of a very good one of the blue chip company in India.
Correct.
And though it has happened, whatever happened is happened in NSE fiasco, that is a different story. But if such companies will be listed, then there will be more disclosures, there will be more corporate governance, and that will ultimately benefit the country progress. So with this, today we are closing this session. Thank you all, and have a nice weekend.
Thank you, Manoj,
Thank
Manish,
you.
everyone
Thank you.
providing the
Yeah.
platform, and literally feeling honored and privileged to have here. And we'll be there for another set of unlisted series and all that. This is another kind of a new kind of a product. Only.
Right. Thank you very much.
Thank
Yeah.
you. Bye
Thank you.
all.
Yeah.
Okay, happy weekend.
Bye.